have joined us, and I'd like to appreciate the fact they've masked up. If you have a mask, please make use of it. Do not use it as a handkerchief. Please make use of the mask, because we still have the problems. At this point in time, ladies and gentlemen, allow me request that we rise up and we start this official ceremony with the anthems. The legacy team will lead us the way, and whenever I see that everyone is up, we'll start with the anthems.
Ilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike, umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Thank you very much, Legacy. Ladies and gentlemen, as we are still up, allow me to invite Mr. Paul Kalindi from Bank of Uganda to come and give us the opening prayer.
Let us pray. Loving Father, we thank you for the gift of life. We thank you for your providence and protection that you've granted unto us. As we start off this event, we pray for your guidance so that whatever is discussed over here shall be a cornerstone to improve our country, but also to steer us into financial inclusion for the betterment of our economy. I have prayed, believing in the mighty name of your Son, our Lord Jesus Christ.
Thank you very much, Paul. Ladies and gentlemen, once again, allow me to welcome you to the annual Financial Inclusion and Financial Literacy Forum. This is the inaugural event. As to many of us that have managed to interact, with the strategy, we'll appreciate that this is one of the objectives of the strategy, to make sure that we have this forum that speaks into understanding and appreciating how far we have managed to move. There are a number of aspects that speak into the strategy, and those directions in terms of the pillars that segment the different strategies, the relationships of how the two, financial literacy and financial inclusion, speak into one another. And I'm glad that we've made time to be here on this day. Allow me specifically recognize different dignitaries, and I will be doing this along the way alongside Rita. Allow me appreciate the presence of the PSST, as he's called, the Permanent Secretary and Secretary to the Treasury, Mr. Ramadan Gobi. Sir, if you could wave for recognition. For those who do not know you, then they could see you and clap for you. Thank you very much. In the same vein, allow me appreciate the different directors, commissioners, assistant commissioners from the Ministry of Finance who have also joined us. In the same wave, allow me appreciate the presence of the Deputy Governor, Bank of Uganda. Sir, if you could also wave. Thank you very much. The executive directors and staff of Bank of Uganda. We'll continue appreciating. I also noticed that we have in our midst, we have Mr. Ivan Setimba from Alliance of Financial Inclusion at Africa, Middle East. Please wave for recognition. Sir, thank you very much for coming. We have Mr. Richard Biarogaba, the Executive Director, Finance at the Bank of Uganda, who could also wave for recognition. Yes. I hope that our clapping can improve with time, especially when we want to appreciate people. Because especially when you clap for people in a mood that is 50-50, we want to clap for you, but as if we don't want to clap for you. They are not very sure if you're excited to see them. But thank you very much. Ladies and gentlemen, our program is packed. Allow me to inform you that we have agreed to strictly go digital. So over there is placards on your tables that show the program, but they also have a QR code that you can scan to get the details of what we're going to discuss today. The QR code should be able to take you directly to the strategy, both the strategy on financial literacy and then the strategy on financial inclusion. It should also give you a snippet of the entire program and how we intend to move. So please make use of it. We've also provided some literature in terms of financial literacy on your tables, but certainly all information is digital. Over there outside, we have different vendors that we have put out who should be able to take you through the different innovations that they've done in the space of financial inclusion and financial literacy. And it will be very important that when we catch our break, we should be able to dive into that conversation and see what more is happening there. Ladies and gentlemen, without any further ado, allow me to welcome the Deputy Governor, Bank of Uganda, to come and give us the opening remarks.
The Secretary of Treasury and the Permanent Secretary, of course. Permanent Secretary is here present. The Executive Director, Alliance for Financial Inclusion. Heads of government, departments, and agencies. CEOs of financial institutions, development partners, private sector, and civil society. Distinguished invited guests, members of the press, ladies and gentlemen, a very good morning to all of you. On behalf of the Bank of Uganda, it's my honor and privilege to welcome you to this inaugural Annual Financial Inclusion and Financial Literacy Forum. First, I want to thank you all for honoring our invitation. I'll start my remarks by providing some context on the genesis of this forum. In October 2017, the Bank of Uganda, together with the Ministry of Finance, Planning, and Economic Development, launched the first National Financial Inclusion Strategy, 2017-2022, supported by Alliance for Financial Inclusion. The strategy provided for convening of annual Financial Inclusion Forum as an avenue to share knowledge, discuss policy interventions, and obtain stakeholder feedback on financial inclusion development. In addition, the first strategy for financial literacy was successfully implemented between 2013 and 2017, and Bank of Uganda and the Ministry of Finance, Planning, and Economic Development launched the second strategy in 2019. These two provided an annual stakeholder engagement on financial literacy. Today's inaugural Financial Inclusion and Financial Literacy Forum therefore bring together these two critical engagements as prescribed within the strategic documents. The two pillars, i.e. financial inclusion and financial literacy, are related, yet at the same time akin to fraternal twins. The National Financial Inclusion Strategy defines financial inclusion as, quote, having access to and using a broad range of quality and affordable financial services which help ensure a person's financial security, unquote. In contrast, the strategy for financial literacy defines financial literacy as, quote, having the knowledge, skills, and confidence to manage money well, taking into account one's economic and social circumstances, unquote. I hope we are really financially literate here. Therefore, while financial inclusion acts from the supply side, providing the financial products and services that people may demand, financial literacy makes people aware of what financial services they can demand. Our theme for today, enhancing financial inclusion through digital financial literacy, adjoins the two pillars while rightly recognizing the progressive role of digitalization in this changing environment. It has been said that through the fourth industrial revolution, what we call Industry 4.0, is not only about technology-driven change, but also an opportunity to help everyone, including leaders, policymakers, and people from all income groups and nations, to harness converging technologies to create an inclusive and human-centered future. Our approach to the future of things should begin with addressing issues to do with inclusion, and the theme of today stimulates the thinking. How can we leverage advancements in digitalization to kindle the demand for financial services by people at the very bottom of the pyramid, and thus increase access to and usage of quality and affordable financial products? The discussion of these critical issues cannot be any timelier. Data has shown that about 75% of Ugandans' workforce remain in the informal sector, with the youth and the women overrepresented. Youth and women are, indeed, the focus groups identified within the financial literacy strategy and the focus of today's sessions. How can technology supplement or enable our efforts to propel the youth, women, micro and small medium enterprises into the formal financial sectors? These are some of the issues that we hope to unpack in our discussions today. Ladies and gentlemen, on a cautionary note though, the deployment of technology and acceleration of digitalization of financial services has stopped cybersecurity risks and digital fraud. It has enabled hackers to infiltrate IT systems, disrupt service for ransom, and steal funds, intellectual property rights, among others. While fostering digitalization, we should also be cognizant of our roles in mitigating such risks to ensure financial inclusion efforts are not derailed. I would also like to draw our attention to the issues that threaten the sustainability of our environment and social well-being. This is important because it touches the heart of the activities of those engaged in the informal sector. We recently saw the impact of extreme weather events like floods and drought on the communities in eastern Uganda and on food securities in the Karamoja region, respectively. Also, food inflation has soared over the past few months from 0.7% in February 2022 to 16.4% in July 2022 because of the dry weather conditions across the country. This adversely affects the bottom of the pyramid in society, who are mainly engaged in informal activities and spend a large proportion of their incomes on food. Their ability to adapt to these challenges is not helped by the fact that most of them are financially excluded. As we embrace the adoption of digitalization to kindle the demand for financial services and access to quality and affordable financial products at the bottom of the pyramid, I urge all of us to remain cognizant of the effects of our innovations on environmental sustainability, social well-being, and governance. Indeed, Bank of Uganda remains conscious of all these technological developments and emerging issues that could be critical for enhancing financial inclusion. As a result, in its recently launched strategic plan 2022 to 2027, the bank will pursue the following initiatives. A, is going to develop the capacity of its staff to take advantage of emerging technologies like artificial intelligence, big data analytics, machine learning, cloud computing, and cybersecurity to enhance its role in fostering price stability, financial system soundness, as well as financial systems and payments systems development. B, implement the adoption of supervisory technology, what we call SupTech, which will enhance regulatory oversight of the supervised financial institution. These institutions should also embrace the deployment of regulatory technology, what we call RegTech, to enhance the regulatory compliance. Again, this is where Bank of Uganda is going. We're not living in the past. C, the supervised financial institutions will also be encouraged to observe the minimum environmental, social, and governance standards by extending their business models to include sustainability concerns and the impact on society, especially those on the bottom of the pyramid. We expect that current and emerging fintechs will also play a major role in fulfilling our strategic initiatives, and we welcome their views on how we can go about formulating and implementing policies to achieve the objectives of financial inclusion and literacy in a sustainable manner. As I conclude my remarks, I would like to challenge my team at the Central Bank and all the stakeholders present today to take heed of and leverage the discussion in this forum as part of our review for the National Financial Inclusion Strategy, which comes to an end in September 2022. Let us reflect on where we've come from, how much has been achieved, challenges that we face, what needs to be adjusted in our strategy, and what policy actions need to be taken going forward to promote financial literacy and enhance financial inclusion in Uganda. In the words of Charles Caleb Colton, an English cleric and writer, quote, "Be real and adjust your strategy according to honest results," unquote. Once again, I thank you all for coming to participate in this forum, and I wish you successful deliberations. And it's now my most singular honor to invite the PSST to give you his remarks. May God bless you all. Thank you.
You know, COVID is still here. These guys, any the Deputy Governor of Bank of Uganda, my colleagues, I saw one of them, the Permanent Secretary of ICT, Dr. Amina. Are you there? I don't want to recognize people who are not here. The Executive Director of the Alliance for Financial Inclusion, representatives of government institutions, the CEOs of financial institutions present, development partners, the private sector, civil society, all of you distinguished ladies and gentlemen, a good morning to you. I hope you are fine. I would like to start by thanking the Bank of Uganda and my team at the Ministry for putting together this wonderful symposia, but also for inviting me to speak at this very important and timely forum. I am very pleased to have the opportunity to speak today about the importance of financial literacy and financial inclusion. As you know, building a population of financially literate and included citizens is vital, not only for a thriving financial sector, but also for included citizens. And as a country, we want to see inclusive growth for all Ugandans. That's why the theme for today's forum of enhancing financial inclusion through digital financial literacy is quite an important one. We can't achieve inclusive growth without financial inclusion. And the future progress in financial inclusion relies on a solid foundation of digital financial literacy. I actually often tell people that there are two major opportunity equalizers in life. One of them is financial inclusion. The other one is education. So today we are here to launch the Financial Capability Survey of 2020 report, which is a baseline study for Uganda that measures the level of financial capability in the country. I welcome this excellent addition to evidence-based financial literacy and inclusion. We are also here to kickstart the preparation of the second National Financial Inclusion Strategy. The first National Financial Inclusion Strategy was launched in 2017, as the Deputy Governor has alluded to it, and it comes to an end this year. Its purpose was to develop a consolidated definition, vision, strategy for improving financial inclusion in Uganda, with the ultimate goal of families being financially secure. I am pleased to say that Uganda has since made good progress in boosting financial literacy and in particular financial inclusion since the launch of the first strategy. According to the World Bank's Findex database, the share of Ugandans with access to a financial account, either with a formal institution or a mobile money provider, has risen from 59% in 2017 to 66% in 2021, although lower than Kenya, which is at 79%. Our target is to increase this number to 80% by 2027. With more success to financial information, more access, this number can easily be surpassed by then. The share of Ugandans borrowing from a formal financial institution has also risen steadily from 15% in 2017 to 19% last year, 2021. It is now almost double the average rate of sub-Saharan African countries, which stands at 10%, and far above the rate of 4% for Tanzania. At this forum, we would want to recognize the digital world in becoming central to the financial inclusion, and in this respect, we are also making promising progress. About 61% of Ugandans now use digital payments, up from 51% in 2017. 47% of Ugandans use a mobile phone or the internet to access financial account, more than double the average for the continental competitors, which stands at around 21%. Importantly, our Findex database also shows that Uganda has enjoyed significant success in reducing the financial inclusion gender gap. As just one example I can share, the share of men with a financial account was 13 percentage points higher than women in 2017. Thanks to stronger growth in the share of women with accounts, this gap is now just 2 percentage points. The financial inclusion for the poor, too, has shown some tremendous growth. In 2011, just 10% of the poor had access to an account. This figure has now grown to 50% and more. Progress on financial literacy and inclusion in Uganda is supported by past, present, and future government interventions. For example, Profila, this is the project for financial inclusion in rural areas, has been promoting rural financial service provision in Uganda. By 30th of June this year, Profila had supported the establishment of 15,000 community savings and credit groups and strengthened over 3,000 more of those groups that had already existed, with women making up to 76% of the beneficiaries. Targeted support has included capacity building and training on financial literacy. In addition, the Emyoga program, launched in 2019, has now disbursed seed capital amounting to 248.4 billion shillings to more than 6,600 Emyoga circles. Training has been rolled out to more than 1.3 million individual members, and also 44,000 Emyoga circle leaders have been trained. Government has also launched, as you are aware, the Parish development model, whose main objective, as we are all aware, is to get more of those people who are outside the financial sector and the economy at large to get included. The financial pillar of this model is setting up 10,594 new circles across the country, bringing subsistence households into the monetized economy. Over the next few years, the PDM will help to bank the unbanked, to finance the unfinanced, and serve those excluded from the traditional financial system. In terms of the legal and policy framework, the Ministry of Finance, Planning and Economic Development has developed the Financial Sector Development Strategy, which brings together and also streamlines all efforts pertinent to the financial sector's contribution to national development. It articulates a vision in which Uganda has a sound, integrated financial sector that supports sustainable, inclusive economic growth. In addition, the amendment of the Microfinance Deposit-Taking Institutions Act will allow microfinance institutions to use agents banking. This change will provide a significant boost to agents banking, a crucial enabler of financial inclusion in rural areas. We are going to Parliament very soon to amend this law. Furthermore, the introduction of the National Payment System regulations will enhance financial inclusion by boosting consumer protection, ensuring all of those making digital payments are safeguarded. We are actually working on the national switch with the governor there. He always tells me, PSST, one thing, national switch. Whenever he meets me, now I am becoming national switch. And I'm assuring him that we are going to deliver within time. Although we have made good progress, our financial inclusion journey is by no means complete. There remains room for growth in overall financial account ownership, access to credit, savings rates, and the use of digital payments. And while the poor have made important progress on financial inclusion measures, as I've indicated, they still lag behind the rich in access to and also the use of financial services. The latest data from the Uganda National Household Survey suggests that education level remains a key predictor of financial literacy and inclusion. 65% of Ugandans without a primary level education have no access to financial accounts, compared to 23% of those with at least a secondary level education. Again, education, financial inclusion, opportunity equalizers. We must redouble our efforts to ensure all Ugandans have access to essential services in the financial sector, as well as skills they need to use the financial sector. Government has earmarked access to financial services as one of the key pillars to socio-economic transformation through bringing the 39% of the households in the subsistence economy into the monetary economy. That is why it is important that as we meet today, we chart a path for the development of the second National Financial Inclusion Strategy and also launch the National Capability Survey. Now it is the time to build on the progress we've made, working together. By together, I mean both the public and the private sector, the profit and the not-for-profit, and all those who have made a tremendous contribution in this particular arena. I've seen my old friend here, she ran away from financial deepening Uganda, but I remember you've had a tremendous journey in this area. So we are going to work together to deliver this financial literacy as well as inclusion for all Ugandans. I thank you very much.
I took a little bit more time to walk to the stage thinking that you will clap for the PSST longer. The commonality between the Deputy Governor Bank of Uganda and the PSST is the height, and the assumption is that tall people are able to see far. Once again, ladies and gentlemen, let's clap for the two presentations that we've had. I want to avoid to regurgitate the information that has been shared here, and believe that those are insights that can speak to us and be able to understand the task ahead of us. Following the principle of parsimony, keeping things simple. To include, when someone says financial inclusion, I imagined when I was a little bit younger, would I have understood? So I like to keep my conversation simple. To include is to ensure that no one is left out. But this is system driven, so that means that there have to be institutions, there have to be structures that are system led to make sure that none of us are left out. And that's why government takes critical steps to ensure that the policy is supportive. But beyond the policies or existence of such systems, even the individuals must have the willingness not to be left out. So what role are you playing? And of course, when it comes to this, I started to think about when we come to such places like hotels, I still wonder why in our African setup, there are many of us who relate to words like tampeko. A tampeko, for the people who do not remember or who have not used it, is slightly a bigger cup that you use to take tea. But when we come to such places, the cups are smaller. So the question between you and me is, are we included when we come to such setups when it comes to enjoying tea? So that's now the discussion of when we start to create systems to be able to include the population, how sure are we that they are able to absorb that sort of information? And that's the reason why we are here, and that's why these strategies are developed, to make sure that they can be able to speak to the different people in different communities. And that's why you realize that the growth of mobile money, because it's easily adoptable. And so that's why these conversations are very, very important for us. And of course, today we are speaking about financial literacy and financial inclusion. You'll appreciate that the strategy for financial inclusion that started 2017, ending 2022, is almost a few months away to closure. But that for literacy, it's still going till 2024. So it's very, very important that we appreciate that the relevancy of literacy is very, very critical across different populations. I've been reliably informed that the PSST, together with the Deputy Governor, will not be with us throughout the entire day because of other engagements, and which we are able to appreciate. Allow me request Hashim and Rita. We're going to be having a photograph moment outside, and the following people are requested to join in. Hashim and Rita, please support on this. One, of course, is the DG, and then PSST. We have the different panelists. At a later point, you see our schedule is to have panelists here. So, and certainly this we shall do after the keynote address, from Alliance for Financial Inclusion. But before we have the presentation from Alliance for Financial Inclusion, allow me to appreciate the different dignitaries from different institutions that have also joined us. We have development partners, that is Alliance for Financial Inclusion. We have UNCDF, we have FSDU, we have Care Uganda, we have GIZ, and we have private sector players. We have CEOs of different commercial banks. We have Airtel Mobile Commerce Uganda. We have MTN Mobile Money. We have Wave Transfer. We have Cheaper Technologies, and so many others. So allow me to appreciate their presence. And like I said, in terms of protocol, we'll continue to appreciate the presence of the different institutions that have joined us here. We also have other institutions that are MDAs of government, and these include UMRA, URSB, NSSF, NITAU, IRA, we have UCC, we have NIRA, and so many others. But specifically because of job security, allow me appreciate the presence of my CEO, Mr. John Nchisache, from Uganda Insurance Association. Here I'm protecting my job, and it's critical that I continue working there for me to belong. Mr. John Nchisache is over there. Please wave for recognition. Yes, you know, right now we are in mid-term review appraisal. Some of these score you a little more marks. At this point in time, ladies and gentlemen, let's have our next presenter, which is the keynote speech of the Executive Director of Alliance for Financial Inclusion, and it's going to be on our screens. Legacy.
Honorable Matia Kazaija, Minister of Finance, Planning and Economic Development, Dr. Ramatan Gobi, Permanent Secretary and Secretary of the Treasury, Ministry of Finance, Planning and Economic Development, Dr. Michael Atingiego, Deputy Governor of Bank of Uganda, heads of ministries, departments and agencies, distinguished guests, ladies and gentlemen, a very good morning to Uganda. Allow me to begin by saying it is really an honor for me to address this distinguished gathering here. I particularly would like to thank Dr. Michael Atingiego, the Deputy Governor of the Bank of Uganda, for inviting me to deliver the keynote address at this very, very important event, the inaugural Financial Inclusion and Financial Literacy Forum in 2022. Personally, I would have very much liked to be with you this morning in Kampala, but regrettably, I am not able to do so because we are currently preparing for the Global Policy Forum in Jordan in September this year. So I'm in Kuala Lumpur and I was not able to go away, which I regret very much because I would have loved, after so many years, to fly into Uganda again, arrive in Entebbe, drive down to Kampala and be with you. But there's always a next time, so I'm looking forward to that. I would like to take this opportunity to commend the government of Uganda, the Bank of Uganda, the development and also the technical partners, the civil society, the private sector, and all other stakeholders here who are actively participating in this forum. The theme of this year's forum, Enhancing financial inclusion through digital financial literacy brings to the fore the importance of digital financial services, or in short DFS as we call it, in advancing access to and usage of financial services. Now, advancing the financial inclusion agenda, as the world recovers now from the severe impacts of the health crisis, of the COVID-19 pandemic that we have seen, is very critical in ensuring that, again, no one is left behind. So this is still the same agenda that we have. And our experience has shown that also financial crisis and economic recession entrenches the cycle of poverty. It has been estimated that during a financial crisis, poor households can lose 10 times more of their income compared with an average household. So we all can imagine what will be the impact on the poor by the financial crisis. Now, the role of financial inclusion has, as we all have seen over the past decade, become more magnified in improving the livelihoods and to strengthening the financial resilience of the disadvantaged populations. It provides the opportunity to save for the future, to invest and generate income, and to insure against adverse events. And the gains that we have made so far provide us indeed with the opportunity to accelerate the financial inclusion agenda as a national imperative. Now, what is actually happening? The evolution of DFS, coupled with rising innovations in financial technologies, a spread of different business models, and many new approaches to service delivery, that represents an opportunity for us to reach previously excluded and underserved populations with more tailored financial services. And the list of DFS models proven to advance financial inclusion has been continuously growing over the past decade. New, bigger, and players that we have not been used to are rapidly entering the space to serve both individuals and the SMEs with their new products, such as digitally delivered credit, and using innovative business models such as application programming interfaces, the APIs, alternate credit assessments, among many others, and thus creating new levels of complexity in the DFS landscape. So everyone has to learn. Not only regulators are learning, but also, obviously, the users of these services have to learn. It brings these new opportunities for the financial consumers, from increasing the potential reach and access of financial services to offering more convenient and faster transaction and more tailored products. Now, as I see the development in Uganda, I think the country has witnessed tremendous acceptance of digital financial services driven by uptake and use of mobile money services over the past time. From actually 32.2 million registered mobile money accounts to the value of now annual transactions of 138.9 trillion Ugandan shilling in 2021. While this growth is very impressive and also laudable, it comes with challenges related to digital financial literacy, which means actually that the beneficiaries, the customers, have a learning need as well. Let us define digital financial literacy. Digital financial literacy is a multidimensional concept which can be defined as acquiring the knowledge, the skills, the confidence, and the competencies to safely use digitally delivered financial products and services and making informed financial decisions. There are 4 dimensions of digital financial literacy. The first dimension is knowledge. Knowledge of digital financial products and services, which captures the basic understanding of these products and services. And the individual should be aware of the existence of non-traditional financial products and services as well, accessed through digital means such as mobile phones. The second dimension of digital financial literacy is awareness of digital financial risks. Individuals and firms need to understand the additional risks that they may encounter when using DFS, which are more diverse but sometimes harder to spot than those associated with traditional financial products and services. The third dimension of digital financial literacy is risk control, digital financial risk control, which is related to the DFS users' understanding of how to protect themselves from risks arising from such use. For instance, they should know how to protect their personal identification number, the PIN, and other personal information when using financial services provided through digital means. Use these numbers responsibly. The fourth and final dimension of digital financial literacy is knowledge of consumer rights and redress procedures in cases where DFS users fall victim to the above-mentioned risks. They should understand their rights and where they can go and how to obtain redress if they fall victim to fraud or other loss. Now, we do see an increasing recognition of the importance of digital financial literacy recently. Financial technology, or in short, fintech, in other words, using software, using applications and digital platforms to deliver financial services to consumers and businesses through digital devices such as mobile phones, has become recognized as a promising tool to promote financial inclusion. That means access of excluded households and small firms to financial products and services. However, the improved access to financial services via fintech requires now higher level of digital financial literacy, of better knowledge, to make effective use of these services and to avoid mis-selling, frauds and phishing, hacking attacks, unauthorized use of data, discriminatory treatment, and behavioral issues such as excessive borrowing. Digital financial literacy is increasingly becoming an important aspect of education for the digital age. And I think Bank of Uganda is going exactly in the right direction here. Together with other relevant stakeholders, the BOU is implementing the second national strategy for financial literacy 2019 to 2024. This strategy includes a special provision for digital financial literacy that is expected to be streamlined across all target groups and driven by the rapid expansion of DFS in Uganda. I think it is commendable that Bank of Uganda is moving ahead in this space. And of course, the network is very, very interested in learning from your experience and bringing the knowledge that you're generating through these introductions of the new strategy to the surface. AFI as a global policy leadership alliance, indeed, through our member-driven and bottom-up approach that you all know, already recognized the need to strengthen digital financial literacy within the network. Within this context, we have produced a guideline note and a toolkit on digital financial literacy. It has been developed or both frameworks have been developed to provide an effective framework of policy recommendations that supports policymakers and regulators in understanding, developing, and implementing interventions directed at advancing digital financial literacy within their respective jurisdictions. What Bank of Uganda is doing, as I said, is very important in this space. Ladies and gentlemen, the future of financial inclusion, as well as the wider financial services, will continue to be shaped by technology. We're actually not sure how far we have come in this space, and I'm pretty sure that we can expect many, many more technological developments to happen. While there are obvious benefits, there are indeed, with all these developments, new emerging risks resulting from the use of technology, the risks of technology. As such, we need to ensure that consumers of the digital financial services have the prerequisite knowledge and skills required for them to use these services in a responsible and reasonable manner. Allow me to end my contribution to this event today with a call for action to all the policymakers, the market players, and other stakeholders in the ecosystem to join hands and to leverage digital technologies in a responsible and safe manner to reach out to the vulnerable sections we all care for. The vulnerable sections of the society, such as women, youth, elderly, forcibly displaced persons, and others, by promoting digital financial literacy. The need for better digital financial literacy is never out of fashion, even in the advent of the glory of financial technology. I wish you a very fruitful deliberation during this inaugural Financial Inclusion and Financial Literacy Forum. And once again, I would have liked to be there, but as I said, there will be a next opportunity. I wish you all the best and thank you for your attention.
All right, I think that we've appreciated the presence of AFI in this whole process. I'm a little challenged in terms of protocol, but allow me appreciate everyone here for their presence. There are different dignitaries that will be walking in here. And of course, for some that know me closely, they have been winking at me and saying, "Don't you know me?" And I kept trying to tell myself, how do I proceed? But allow me appreciate the MD of NSSF, who we all know, who is keeping our money for when we grow old. It's not very comfortable to keep for you money, but at least let's appreciate that he's also with us here with a round of applause. Sir, thank you very much for joining us. Ladies and gentlemen, as you will all appreciate that this is the inaugural conference on financial literacy and financial inclusion, where we are understanding the different pillars that are segmented into these different strategies. One is that we will all appreciate that the strategy for financial inclusion has about 5 or 6 pillars that has credit infrastructure, digital, it has enhancing financial literacy, deepening and broadening savings. Now we want to get into deeper to understand how much we've been able to speak into financial inclusion. And of course, when you talk about inclusion, do not forget the story of the big cup. But of course, sometimes when I talk about inclusion, I remember my first time leaving Gomba and I came to Kampala, and I interacted with a very great meal that we all knew at the time, and that was chips and chicken. And there was chips and chicken and cutlery of forks, spoons and knives, and there was hunger in the middle. And of course, now in a system where you want to use both, when you have hunger, I am sure that many of you forgot about the cutlery. So how do we create systems that speak into being absorbed by the different communities? We are going to delve deeper into those conversations. But also we are going to talk about financial literacy and the space of financial literacy. How much do you know in terms of saving, budgeting, but also sticking to the budget? For different households, if you ask many of us here, how many of us draw a budget, an annual budget for our homes in terms of how we intend, and discuss it with our people in homes that this is how we intend to run the home following this budget, and do our children stick to the budget? And those are aspects, because cumulatively the decisions that are made at different households cumulatively contribute at the aggregate level and then affect the entire economy at large. So ladies and gentlemen, we are going to get into that space, and of course to get into that space I will invite different individuals from the Bank of Uganda. I'll first invite Mr. Alex Ochan, the head of Financial Inclusion Division at Bank of Uganda. It is always in order to clap for them as they make their way here. And after his presentation, we will then have Ms. Tilda Nabanja, who's a team leader on Alliance for Financial Inclusion. But for now, let's appreciate Alex, who's going to start with the presentation.
Yeah, thank you very much. I've been given a gadget that we are going digital.
traditionally we are used to having a laptop in front when you're presenting. So I'm wondering how I'll be able to make it without seeing the traditional laptop, but I hope it's a learning curve. Allow me to observe all the protocols here present. Good morning, everyone. Yeah, my role this morning is to take you through the journey. I recognize the remarks given by the Deputy Governor and the PSST that covered most of the things that we are doing, including the progress that we've made so far. But it's good to step back a bit and reflect on how far we've gone, but also more important, where we are coming from. For most of you, you may be hearing the strategy for the first time. In terms of the outline, and again, like mentioned by the MC, the code there provides all the detailed information that you may want to access, all the strategies that are there, the National Financial Inclusion Strategy, the Strategy for Financial Literacy, the Financial Capability Survey, and the agenda for today. I'll take you briefly through the journey, which is the background, a little bit into the National Financial Inclusion Strategy, the achievements without going too much into the details, because the subsequent sessions will have panelists that will discuss into detail what they are doing. A bit of the KPIs, building on what was highlighted by the PSST, and the challenges that we faced, largely restricted to implementing the strategy. So looking at where we're coming from, in 2009, the Bank of Uganda joined the Alliance of Financial Inclusion, and we are glad the ED made a keynote address, and we have a representative from here. But also, a letter of no objection was issued to 2 mobile network operators. At that time, it was MTN and Zain, now Airtel Uganda, or Airtel Mobile Money Commerce. We also did the second Financial Inclusion Demand Side Survey, famously called the FinScope Survey in 2009, that provided insights into where we are and in terms of financial inclusion, but also the barriers that the consumers face. Fast forward, in 2011, at the Central Bank, we formulated a financial inclusion project that was based on about 4 areas. One of the areas was financial literacy. The second one was consumer protection. The third one was on innovations. At that time, mobile money had been in place for nearly 2 years. And the last one was on data and measurement, recognizing the importance of data in evidence-based policy making. That same year, in 2011, Bank of Uganda also developed the Financial Consumer Protection Guidelines that is still running up to now. 2013, the Central Bank issued the first mobile money guidelines. Also, as mentioned earlier, we developed the strategy for financial literacy for 2013 to 2017, and the third FinScope survey was carried out. In 2016, an amendment was done to the Financial Institutions Act to allow for agent banking, bank assurance, Islamic banking, and also the Tier 4 Microfinance Institutions and Money Lenders Act was enacted in 2016. Come 2017, agent banking regulations were passed, allowing for commercial banks and credit institutions to onboard agents. And that was the same year when we launched the National Financial Inclusion Strategy, recognizing that different stakeholders were implementing different initiatives relating to financial inclusion. Therefore, we needed a more concerted or organized effort in implementing financial inclusion. The same year, UMRA was established following the passing of the Act in 2016. 2018, we conducted the 4th FinScope survey. Just to go back a little bit, the National Financial Inclusion Strategy of 2017 was based on a baseline of 2013. So it was nearly 5 years when we did not have information to carry out diagnostics for financial inclusion. So the 4th survey was done in 2018, 18 that showed that the level of financial inclusion at that time was at 58%, and I'll speak to what financial inclusion is at a later time. Also, the agent banking shared platform was launched that allows for banks to use the same agents. In 2020, the Bank of Uganda and the Ministry of Finance, with the support of Alliance of Financial Inclusion, carried out the midterm review of the National Financial Inclusion Strategy. It came out with findings on the areas that we needed to change, but as you recall, that was amidst COVID-19, and most of the engagements were virtual. Also, the National Payment Systems Act was passed, and we carried out the Financial Capability Survey. The 2020 November and December was the period when we collected the data, and the report came out a little bit later. In terms of the strategy, a lot has been spoken about. I'll not dwell much on that slide now, but that was the launch. It was at the same venue at Serena here with our former governor, rest in peace, and the rest of, on the right-hand side was the Deputy Executive Director for Alliance of Financial Inclusion. So what are these 4 or 5 objectives for the strategy? The first one looks at reducing financial inclusion and access barriers to financial services, and in it, it has 6 initiatives relating to infrastructure for agent banking. It also relates to infrastructure for eKYC, allowing banks or financial institutions to access the NIRA database, which I'll speak to. It relates to reducing the age of the youth to access financial services, those between 16 and 17 years to access financial services, and many others. On the left-hand side is developing credit infrastructure for growth, which some of the initiatives in there relates to improving the CRB to onboard other informal credit providers that are currently not included. It also relates to having government establishing different funds that can support the micro, small, and medium-term and medium-sized enterprises. The third one relates to building out the digital infrastructure for efficiency with 10 initiatives, and some of the initiatives relates to passing the National Payment Systems Act, which is one of them, but also promoting interoperability, and I think the PSST mentioned around the national suite to promote interoperability. In terms of deepening and broadening formal savings, investment, and insurance usage, developing products that the consumers can invest in is one of them, but also look at savings products that consumers can use, as well as insurance, and also more important is having a national insurance policy in place. And the last one, and which is more related to today's session, is consumer empowerment for individuals with enhanced financial capability. That has initiatives relating to conducting the financial capability survey, but also carrying out FinScope or demand-side surveys, as well as having a consumer empowerment mechanism in place. There are about 53 initiatives. The details could be found in through the link that we shared. I'll quickly take you through some of the successes that we've achieved over the period. But before I go there, let me just explain a little bit about the governance structure or the implementation mechanism for the strategy. On the top side, we have the steering committee, and the steering committee is chaired by the Minister, Honorable Minister of Finance, co-chaired by the Governor, Bank of Uganda. And the members of that committee are heads of the different regulatory bodies, from Insurance Regulatory Authority, Financial Intelligence Authority, Uganda Retirements Benefit Regulatory Authority, Capital Markets, and Uganda Microfinance Regulatory Authority. This committee is supposed to sit at least once in a year, and they're supposed to provide the direction for implementation of the strategy. I must appreciate the Minister for heavily steering this committee over the last 5 years. In the middle part is the Interinstitutional Committee on Financial Inclusion, which is the technical committee that steers the implementation of the strategy. It's chaired by the Ministry of Finance, the PSST, and has the Bank of Uganda, IRA, the Ministry of Trade, UCC, UMRA. Development partners sit on that committee as observers. On the left-hand side is the Secretariat, which is the Bank of Uganda, and the Secretariat provides support to the Interinstitutional Committee, the different working groups, and the forum, which is on the right-hand side. Now, on the lower side are the working groups. Now, the working groups are centered around the 5 objectives which I mentioned earlier, and they're a mechanism for monitoring and evaluation, but also reflecting on the progress that has been made in terms of implementing the strategy. They are drawn from the different stakeholder institutions, and they meet every quarter. The Bank of Uganda has been coordinating this as a secretariat, and meetings are held every quarter, with the last meeting that was convened in June 2022. Now, today we are implementing one of the structures, which is the Financial Inclusion Forum, that has on board all the different stakeholders, and I think it's a good reflection of our presence here, that one of the implementation mechanisms is being achieved today. The forum brings on board all different stakeholders in the area of financial inclusion to share knowledge, but also reflect on what could be improved in future, and I think it is a good avenue for us to discuss that today. Taking you through the achievements, and I'll not go so much into the details. On the agent banking infrastructure, as I mentioned, agent banking shared platform is operational. It has 22 financial institutions on board, with a total of about 20,000 agents across the country. That is based on the agent banking shared platform. But in total, as at June, we had 27,000 agents. The question is then, are they all active? Perhaps not. About 40 or 50% of the agents are active, meaning they have operated within a period of about 90 days. Linkage between the VSLAs and formal financial service providers, a lot of work is being done by development partners in this space. I could mention one of them as CARE, in ensuring that VSLAs are links to the formal financial sector. In terms of the eKYC, for financial service providers, currently financial institutions are able to access the NIRA database, largely banks and credit institutions, but there are plans also to move beyond the supervised financial institutions and onboard fintechs. For lines of credit to critical sectors, as mentioned by the PSST, there are several lines of credit that are in place. The agricultural credit facility, operations wealth creation, Uganda Women Entrepreneurship Program, and many others such as the Small Business Recovery Fund and the PDM. I was also informed that the Microfinance Support Center and Uganda Development Bank received additional financing during the year financial 2021-2022 and the current financial year. Having a centralized registry for movable collateral, we have the Uganda Registration Services Bureau has the security interest in movable property registry, which is in place, and as at end of 2021, they had about 10,000 registrations in the system, and that allows the micro, small, and medium-sized enterprises to place their movable collateral, such as motorbikes, and borrow against that collateral. More on it will come from the registrar. One of the areas that came out in the current strategy was having an ombudsman with binding powers to resolve disputes on smaller loans. And as I speak, we have the International Center for Arbitration and Mediation, Kampala, ICAMEC, that was established in 2019, and they are supporting smaller disputes, handling smaller disputes on smaller loans. The other issue that came was building the capacity of judicial officers in commercial courts on creditors' rights and insolvency. and this is being done on an annual basis by URSB. Having in place the National Payment Systems Act, this has been mentioned. The Act came into effect in 2020. Implementing regulations were gazetted in 2021, and already licensing is ongoing by Bank of Uganda. Promoting interoperability, what we have currently is mostly bilateral interoperability, but there are plans to use the national suite to promote interoperability across the card as well as the mobile financial services. In terms of having financial services providers comply with the national security policy, this provides a minimum guideline on which both the public and the private sector to comply with and reduce the threats of cybersecurity. What has been happening is that NITA-U has been providing training to financial services providers on the National Information Security Policy on a regular basis. Promoting cashless transactions across the public and private sectors. The Bank of Uganda has been on a continuous basis engaging stakeholders and also creating awareness, more so during the period of COVID, where we went out there to promote mobile financial services, or e-payment for that matter. But also the private sector has been doing a lot of work in encouraging cashless payments, and we thank the private sector for that. Just to add on, in January 2020, the bank reduced the threshold on check payments by half. And that was geared at promoting electronic payments or other forms of payment other than issuance of checks. Also, NITA Uganda launched an e-payments gateway for government services. It was on a pilot basis, but I think they plan to roll it out to other government institutions or ministries, departments, and agencies. Regulatory framework that promotes innovations, more so having a sandbox. Currently, among the regulators, the Bank of Uganda has a regulatory sandbox, or a sandbox for that matter, under the NPS Act, where innovators in payment space can come and test their innovations under a live but controlled environment. We've had players go through the sandbox, and currently we've admitted about 2 fintechs that are testing different products. Insurance Regulatory Authority has a sandbox guidelines that allows for the players in the insurance sector to test their innovations. In terms of having user-friendly interfaces, I think we can all attest to that over the last 5 years, financial institutions have been improving their interfaces within which the consumers can transact. For having UMRA operational, we can all agree that UMRA is now up and running, and we are joined by the ED UMRA here right now. I'll quickly go through the last part of the presentation. Promoting utilization and uptake of agricultural insurance facility. Our government extended this scheme for another 3 to 4 years, but also the Agro Consortium that is running the scheme has opened more branches across the country. I think there's one in Barara and Gulu. Conducting research and surveys on financial capability, customer satisfaction, and other consumer protections practices. As I mentioned, we concluded the financial capability survey, which will be launched today, but also with the support of innovations for poverty action. The Secretariat did a study, a mystery shopping on the current financial consumer protection guidelines, and the findings are available. The past financial literacy strategy was reviewed, and currently we are running with a new strategy that runs to 2024. Improving awareness of financial services among individuals. This is an ongoing initiative under the Strategy for Financial Literacy in Uganda. Communications and monitoring evaluation mechanisms. We have an M&E framework that we use. One of them is through the quarterly working group meetings, but we also report to the steering committee as and when a meeting is convened. But more important is some of the achievements in the strategy are published in the background to the budget, as well as in the different Bank of Uganda reports. So these are the key achievements that has happened in the last 4 years of implementing the strategy, based on the different initiatives that were set to accomplish. When it comes to measurement, I think what is more important is to know what are you measuring. We've spoken about the different survey findings, but is it consistent over time? Are we measuring the same thing? I will not go into what financial inclusion is as per the strategy, because the DG talked about it, but it looks like at 3 areas: the access, the usage, and the quality, which is a component of it. Of course, the ultimate target is financial security, as mentioned. So as per the strategy, access refers to availability of a bank, a microfinance institution, a SACCO, insurance, investment agent banking, or mobile money service provider access point where you can transact. Then the second one is having to use it, which is basically the usage. Having made payments, conducted a transaction, or having an existing insurance policy. The third, which countries migrate through the different stages, of course, from access to usage and quality. In most African countries, we are still struggling on the first 2 parts of access and usage. For quality, looks at whether these products actually meet your demand. And that comes into these financial institutions looking at user preferences for consumers. Does it meet what you would need to use it for? As well as, is it affordable? Can it be provided on a more sustainable basis without necessarily being a burden to you? I just have an example, one illustration of an access point. Imagine you coming from Bombo and you reach Boise and you find there's a commercial, let me say a financial services provider that has about 20 ATMs in one point. And we've seen that you go to a branch and there are so many ATMs, but you've traveled about 5 kilometers. That talks to the issues around convenience. Had you put it in Bombo, where I come from, perhaps I would save my money in terms of the distance and also time. So the question comes, is it provided in a more convenient way to a consumer? It's food for thought for all of us here. When we set out to roll out the strategy, we had KPIs. And again, when you look at 2020, it's not what we've achieved, it's what we should have achieved by 2022, sorry. So in 2017, when we set out to start implementing the strategy, these were some of the key KPIs. Now, I don't have numbers for some of them, but I'll talk about 1 or 2 areas. The first one on the lower side was to have inclusion increase. 52 of adults were financially included in 2013, as I mentioned, based on the FinScope survey of 2013. In 2018, there were 58 formally included based on the findings. Where are we now? I would be lying if I told you this is where we are, because we've not done a consistent study. But based on the findings of the Global Index, as mentioned by the PSST, we are at 66, but this is access to a formal financial institution's account. It gives you a proxy of having moved somewhere, but not actually where we could be. We could be higher than that. Why am I saying so? The 66 only looks at access to a mobile money account or a formal financial institution's account. Could be a commercial bank, a credit institution, or a SACCO account, or any other deposit-taking institution's account. So it excludes access to investment services or insurance, but also excludes other informal access that the population might have. I'm hoping that when we do another study in line with the definitions of what financial inclusion is, we'll be able to realize a higher number. But what is more interesting, when you look at the access strand on the left-hand side, we are supposed to have access points per 100,000 adults at 548 to increase to 615 by 2022. As we speak, as at end June, and these access points are mainly for Bank of Uganda regulated financial institutions. The source data was IMF Financial Access Survey. As we speak now, we have 300 access points for every 100,000 adults, making it easier. For every 1 million adults, there are 23,000 or 22,000 access points that are sharing. But that does not speak to the distribution of the access points. Like I mentioned, you could have all of them on Kampala Road. So that does not speak to the quality. It's an aggregate number. Also, on the right-hand side, we have increasing formal insurance coverage. The coverage of insurance at the time of the survey was 2%, individuals having a policy. When we carried out the financial capability survey, formal access to insurance had grown to 5%, and we must, that was at 2020. Congratulate IRA for this achievement. I do not have comparable numbers for the rest of the indicators, but I'll take you through a second set of KPIs, which we call core financial inclusion indicators that could be monitored on a regular basis because of availability of data. Just look on the left-hand side. We've seen growth in branches. These are institutions supervised by Bank of Uganda. From 2017, it was growing, but around 2021, 2022, it kind of stagnated, both bank branches and the ATMs. But when you look on the lower side, we are seeing growth in bank agents. So what does that tell us? Both the bank agents and mobile money agents. It appears that financial institutions are preferring to go out of the brick and mortar branches and move towards agent banking because of the cost, the lower cost it brings on board, but also it brings services closer to the population. As we discussed, we need to think about how do we scale this up in a more a reasonable manner. Also, we've seen more developments for mobile money agents from around 147,000 in 2017, almost tripling to around 468. After the licensing, we saw the players having more aggressive onboarding of agents. Now, when you look at the core financial inclusion indicators on the right-hand side, that's a table. It tells you that we've so far surpassed our target in terms of access. Okay. We've surpassed our target in terms of access points. I have 2 more slides to conclude. For most of them, with the first one, number 1, mobile money agent outlets, we are far beyond our target, as well as the total number of agents. In terms of deposit accounts, we've also exceeded our target. Just allow me to conclude looking at the challenges, and these challenges are restricted to implementing the strategy. One of them is the process of enacting a law or a regulation. I think for nearly all the initiatives that related to regulation in the past 5 years, either 1 or 2 was passed or enacted within that same period. But we understand that. Also, COVID impacted so much on implementing the strategy. For most of the time, people are working off-site and we could not have physical meeting. But of course, limited funding, and on the limited funding, we've received a lot of support from development partners, and we applaud them for that. And lastly, lack of consistent, timely, and coherent data. We've tried to use different data sources to support the strategy. I thank you.
Ladies and gentlemen, can we give Alex another big round of applause? Can everyone look at their neighbor? Can everyone look at their neighbor? I need this to be more practical. Please look at your neighbor. I see the MD of NSSF has a neighbor, but I don't know why he's not. Please look at your neighbor and tell them that you must have been beautiful. Tell your neighbor, you must have been beautiful when you were a baby. You must have been beautiful when you were a baby. But the problems of the country have put you in this state, but we thank the Lord for your life. Exactly. Ladies and gentlemen, as we all appreciate, we have some senior colleagues that are pressed on time. Allow me request the Deputy Governor, PSST, AFI representative, the NSSF MD, and the rest of the panelists request us to release them as they head out. They should be able to have a group picture. I'll also request the different panelists to join them as they make way, together with the ED of Finance, Bank of Uganda. For the rest of us, we will be able to continue with the discussion in terms of financial literacy and financial inclusion. Hashim, please support the process. Thank you very much. PSST Deputy Governor, together with the rest of team, as you move out, you'll find Hashim, who should be able to lead you to where you're going to have the group picture. I'll also request the different panelists, so please join them so that we have a holistic pre-presentation of the forum this day. Commission of Financial Services, Ministry of Finance, please also join them. As then for the rest of us, we should be able to continue. Allow me make some special recognitions before we go into our next presentation. Because the different panelists have moved out and they constitute our next panel, allow me request that we have a 5 minutes break that should be used to interact, but also grab a cup of coffee, and then we should be able to reconvene when they get back in 5 minutes and continue with the discussion of the day. Thank you. All right. Allow me to request you to reconvene, especially when you're not grabbing a cup of coffee. Allow me to request you reconvene to our seats so that we move on to our next presentation in terms of financial literacy. Ladies and gentlemen, we are pressed on time. I'm going to request that we take back our seats so that we are able to proceed. I see that there are a number of us who are grabbing coffee. Certainly after your cup of coffee, kindly take back your seat so that we can proceed. All right, thank you very much. I'd like to welcome you back from the 5 minutes break. We had Alex here from Bank of Uganda present to us in terms of financial inclusion as the head of the division, and he was talking about aspects of access, usage, and quality. So those are key pillars in terms of our financial inclusion. How do we ensure that different communities can access these services, but also can be able to utilize them? That's why we were speaking about key elements in usage and quality. He mentioned the different pillars that constitute the strategy, which we earlier talked about, and that these are areas of digital infrastructure, financial literacy, credit infrastructure, deepening and broadening of savings, and those are all key elements in trying to ensure that everyone in the population can be able to belong to the financial space. Thank you very much, Alex, and would like to proceed to our next presenter. We will all appreciate that Uganda is a young nation, and we are operating in an economy where there are a lot of young people who are saying that if your money that you have at the moment cannot buy you land, then eat it. So if Uganda is a young nation, and the younger people have messages moving on social media, and they are saying that if the money you have cannot buy you a car, then eat it, you'll end up having a lot of musicians who come here, and the younger people will eat their money. Of course, all that starts to speak into areas of how literate are they. But this is the population that we have. But we're also operating in an economy where there are a number of us who say, government etuyambe. So in key areas where different populations that we serve, and we ensure that those populations must be financially literate and must be financially included. If they are calling on government etuyambe, those are areas that we must be able to investigate. But we all remember the global credit crunch, and we all remember exactly what happened at the time. And these are all key aspects to start to investigate as a country. Where are we in trying to address such concerns that should be able to speak at micro level at different individual households, which cumulatively contribute into aggregated voices that constitute how the economy looks like. As we go further, we were talking about aspects of how literate is the economy. And before I invite our next presenter, allow me to request you to use the registration sheets on the tables. Everywhere, wherever everyone is seated, there are registration forms. Please make use of those registration forms and insert your details. A team from the Secretariat of Bank of Uganda should be able to come and pick those registration papers in terms of archiving this information. Allow me also request you to make use of the QR code. I noticed that some of you, the QR code is opposite. It means that none of you on the table has really taken the initiative to use the QR code. Kindly use the QR code to make sure that you get all the details of the day. At this point in time, without any further ado, ladies and gentlemen, let's make welcome for Mrs. Tilda N. Turiagenda, the team leader of financial literacy at Bank of Uganda.
So, good morning, our esteemed guests. I would start by thanking you all for putting aside time in your busy schedules to make it to this forum. So, as I wait for my presentation to be uploaded, how are we feeling this morning? It's absurd that the PSST and the Deputy Governor had to leave us when the fun is just beginning. So, are there any financial literacy trainers in the room? If so, kindly stand up. Please stand up. I know you're not shy, all of you, so please stand up. And for the rest of us, let's put our hands together for these people. You can take your seats, please. Okay. Now there's a team of 7 people that I would like you to meet this morning. Miria, kindly come up. Daniel. Jacinta. All right, and all the members on the Financial Literacy Association Initiative Committee, kindly come up. You can take your seats. I'll stand on our behalf. Now, ladies and gentlemen, much as the financial literacy trainers across the country are putting aside resources, efforts, and energy to move the financial literacy agenda forward, some are doing it much more than others. The team you see up here before us is the team that gives us the hardest time as implementers of this strategy. They do not let us rest. If these guys want anything from the bank, they will chase for it until they get it. And this is all to move financial literacy in the right direction. This team up here submits their reports that we expect trainers to submit to us on a monthly basis, quarterly, periodically, depending on the work that they are doing out there in the economy. And these people here submit every single activity they have. They make us have a run for our money, and they push us to commit to moving the financial literacy agenda forward. Let's put our hands together for them. So I would like to get some independent insight from some of them. I'll start with Flavia. Flavia has moved the financial literacy agenda out to the urban refugees. She attended a financial literacy training like all the other trainers and convinced Masiko to carry on this initiative for the bulk of the urban refugees in Kampala. Now I'm wondering, Flavia, what has been the impact of financial literacy for the urban refugees? Just briefly.
Thank you very much, Tilda. The impact from January up to June 2022, we've managed to reach out to 1,298 people in the urban areas. Out of these, 562 are refugees. These are urban refugees. For those who know refugees, these are people who are coming from other countries. So the host communities usually live with these people. So the biggest impact has been that we've managed to reach out to these people, and this has helped to build their confidence to change just those few lifestyles, those small things that they do at home for them to be able to improve their livelihoods, other than having that dependency syndrome of waiting for international NGOs and other stakeholders to give them support all the time. Thank you very much.
All right, thank you so much, Flavia. And Miriam over there has done significant work in the eastern part of Uganda, and she has reached out to the rural communities with financial literacy, going down to the grassroots, community radios, groups, under the tree, in the LC's office, everywhere she can reach this information. But I'm wondering, Miriam, is this information impactful to the rural communities?
Thank you very much, Tilda. For the rural community, I think it has been very, very impactful. First of all, these people have been able to at least maintain their household budgets, unlike before the info, unlike before financial education. They've been able to save using the village savings and loan associations, the VSLAs. You will believe, and then that most of these people have VSLAs all over. VSLAs are spread all over, and these VSLAs have been very, very impactful in a way that these people have been able to control their dates. They borrow from the VSLAs, and then also welfare and emergencies. They no longer have to run up and about to cater for their emergencies. It's not only that the VSLAs have helped them to control dates and cater for emergencies, but they have also been able to start up income generating activities, unlike in the past before financial education. Mobile money is yet another one. Before financial education or financial literacy, this knowledge of using mobile money as a means of either saving their money or was lacking. So I should say it has been impactful. Thank you.
All right, thank you so much, Miriam. Now, towards the end of last year, in the banking and in the Banking and Financial Services Month that is spearheaded by the Uganda Institute of Banking and Financial Services, representatives from there, please wave to us. Yes, there's been a lot of effort and outreach during the month of November when it comes to empowering the public with financial literacy or general financial education. And last year, for the first time, we carried out a financial literacy training of trainers program where we brought together representatives from the regulated financial institutions. Now, this enabled us to test whether financial literacy is really necessary, right from the supply side down to the demand side. And we established that indeed, possibly, there could be a benefit. Now, Daniel, kindly tell us, you were the class president of the representatives from the various institutions that partook in that activity. What has been the impact thereafter?
Thank you very much, Tilda. First of all, for job security, allow me to introduce my MD, Mr. R.K. Mina, Bank of Baroda. Please wave to them, sir. Thank you for being my sponsor. Also, allow me to introduce my class that was part of this training. We decided to stay together so that we can build on the knowledge that you gave us, but also share experiences from the different institutions. FinTrain, please wave to the people. Thank you. Tilda, this training has been impactful. Almost 90% of us that attended that training were working with financial institutions. And we had been there in the banking sector and the financial sector for at least 7 to 10 years. But at the end of the training, all of us had come to one conclusion, that we had specialized in the different fields of our expertise in the banking sector and the financial sector, but had little comprehension of how it actually works together. So for us, it has been an insightful period, and it is helping us to now start to have intellectual financial conversations with our customers, within ourselves, and also to make sure now we know which areas to innovate, or at least how to get information that we need to innovate in our areas of expertise, and also for the institution. This is highly recommended for all financial institutions because it has impacted us at least in 3 major areas. We all know that bankers and people working in the financial sector are actually some of the people who have the worst financial management skills and practices. We have some of the worst savings rates compared to other sectors. We have some of we are some of the most indebted. And this is a nightmare for the HR in any of such an organization. Because if you have people who are financially constrained, it's difficult for them to concentrate on what they're supposed to do and deliver. It's a tragedy for the risk person and the finance person, because if you look at the fraud rates, frauds, usually 80% of most of the frauds that happen have involvement of staff members. And these fraudsters will usually target those staff members that are financially distressed and really need, and it will go an extra mile to get an extra buck. So I highly recommend this training for all financial, all professionals in the financial sector, because it not only impacts on the individuals, but actually speaks to the targets of the institution. Thank you very much, Theodore.
All right, Daniel, thank you. There is one more person missing up here. Apollo, wherever you are, kindly come up. Now, Apollo is a representative. Apollo is a representative from the NSSF, which is one of the key partners under the financial literacy agenda. NSSF has done a great deal of work in that sometimes we are asked, should we go to NSSF or come to you? You know? So we thank Apollo and the team for the efforts that they put in moving this agenda forward. Now I kindly ask all of you to stand up here, please. Ladies and gentlemen, because of the efforts that they've put in to move this agenda forward, this team was furthermore requested to constitute what we call the Financial Literacy Association Initiative Committee that has volunteered time and efforts to operationalize the Financial Literacy Association for Uganda. And through this, we hope that we shall better coordinate this activity, follow up with the over 2,000 trainers across the country, and also be able to have better outreach especially in the rural communities. Let's put our hands together for them. And possibly a photo moment before they take their seats. All right, thank you so much, and thank you for having my back in giving us some evidence. Yes. So a lot is said about financial literacy. But what is financial literacy? The DG hinted on this to an extent, and so did the PSST add on. But ladies and gentlemen, it has three major aspects that we try to emphasize as we are endeavoring to reach out to the communities: knowledge, skills, and confidence. One thing that we've seen on the supply side in the financial sector is that we believe we are knowledgeable, but we forget that we may be knowledgeable about other subject matters, but not exactly financial literacy. So you find that the illiteracy levels on the financial side cut across from the urban communities, rural communities, the formally employed, rural, and the efforts to move this agenda in the right direction are really immense, and therefore we require a lot more collaboration. Now, these are the major topics that we cover under financial literacy. And I'm telling you, the Bank of Uganda has given us an opportunity to test and see what other countries have in the space of financial literacy. And I stand here without a shred of doubt to reassure you that the program that Uganda has is the best, for lack of a better word. Now, as we are covering these topics, we not only look at the subject, but we break this down to the individual's social and economic circumstances. And that's what makes this program special. The program looks deeper into the way this individual can transition to make better, sound financial decisions that can move them to the next level. Now, in disseminating this information, we do this in a number of ways. If it means going to radio stations, we shall be there. If it's financial literacy training of trainers, we shall hold them. Collaborations like one we had with NSSF, we will come, because as long as you're moving financial literacy in the right direction, we are there with you. Now, generally, the achievements that we've had over the years are, we've been able to reach out to the refugee communities especially, and this has been because of partnerships with humanitarian organizations such as World Food Program that has rolled this out in partnership with the Finnish Refugee Council. We have seen a lot of work done by Mexico, and we have been able to transform the livelihoods of the refugees. In addition to this, we have trained over 2,000 financial literacy trainers across the country, and we are hopeful that this year going forward, we can strengthen our level of monitoring and evaluation, possibly with the help of the association, to be able to serve them better, support them more, and harness the efforts of the various organizations and individuals. We celebrate World Savings Day annually, and of course we call upon all key stakeholders to partake in this activity so that we can increase the knowledge and discipline in regard to transforming saving across the country. We have over 200 certified and master trainers, so we have a transition certification process where we encourage the trainers to reach out to more and more people, and progressively they can become certified and master trainers at the end of it all. But of course you can see the number is still low. Now, NSSF is one of our major partners, and I can't say this enough because the efforts that they put into financial literacy are outstanding, and we are hopeful that this collaboration and effort can continue till the end of this strategy. Now, in 2020, we carried out the Financial Capability Survey. Now, this survey enabled us to get some demand-side data when it comes to financial literacy and its impact on the populace. Now, we shall see a few more of the results as we go forward. Here are a few statistics. I'm hoping you can peruse through. If you cannot, we shall share this presentation. For you to access the capability survey, you can scan the QR code or scan the code that's on your tables to be able to see all the resources at once. Now, of course, over the years, we have seen that, for example, 21%, only 21% of Ugandans are saving with a clear goal. Are we together? Not just saving, but saving with a goal, which is something that stands out in these statistics to indicate that possibly we need to put in a bit more effort for people to have more focused reasons to save, and therefore assert their efforts better to save and achieve specific goals in their lives. I'm trying to pick out a few statistics that you can refer to. We can see that most of the Ugandans prefer to save in VSLAs, like the example Flavia has given us today. VSLAs. These are the Village Savings and Credit Associations, plus savings boxes. Now, what are the regulated institutions going to do about this? Can we come up with more innovations that can encourage the people to transition? Save this way, but you can slowly grow your discipline of saving until you can acquire a formal product or service. These are some of the things that we can look into and harness most of this data to move the financial sector in the right direction. Now, I highlighted some key findings that I needed us to think deeper about. First of all, the level of financial capability in Uganda is average, 50.4. If there was a lecturer in the room, they would think that's a poor mark, very poor. But given that the last statistic we had to represent the level of financial capability or financial literacy in Uganda, and for your information, we use those two terms synonymously for the case of Uganda because the definition around them is synonymous. So, it's average at 50.4%, but it was initially at 23-point-something%. So it's progress, a step in the right direction. However, on average, 43% of Ugandans are opting to save in the informal entities. 43%. From that survey, we had approximately 22.8 million people surveyed, and if we are to approximate 43% of those, it's close to around 9.5 million people that are opting to save informally. Still, the survey shows us that 73.2% of the adults that were surveyed choose a place to save that is the safest. And when probed further, they know that the supervised institutions are the safest place that they can keep their money. However, only 10.5% of them are opting for these formal entities. Why is that the case? What are we doing differently that is not enabling the bulk of the population to get on board our formal financial system? And the question goes back to us. To what extent are we empowering the people to understand financial issues in such a way that it can transform their lives and they can ultimately transition to appreciate the formal financial services and products that are disseminated to them. In this image too, you can see that our focus in rolling out the strategy for financial literacy in Uganda and all related activities transitions among the listed segments in society. And this is so in the strategy, given that we have limited resources, we have segments in society that require this more than others, and ultimately we had to select segments that require financial literacy most for us to focus on. So it's the women, youth, rural outreach, workplace, and the special interest groups. And that's where we have the forcibly displaced persons, people with disability, etc. It's okay. Okay. All right. Sorry about that. So at this moment, we can see that for us to move the financial literacy agenda forward, we have carried out a lot of benchmarking across the globe, especially through partnerships like with the Alliance for Financial Inclusion. We have been able to explore what other jurisdictions have in this space. We have seen what it takes to have financial literacy for FDPs and have been able to support all the humanitarian organizations to move that agenda forward. We have looked at capability, carried out the financial capability survey, etc. What I'm trying to bring out here is that when we go out to these other jurisdictions, we are looking for what are they doing differently that we can adopt for Uganda, such that our financial literacy program remains relevant, not just for the people of Uganda, but for it to be internationally comparable. So one issue that stood out this May in 2022 was the issue of financial health. Now we found that over the years, the financial institutions have been complaining to us that this business of financial literacy, it's not our core mandate. We cannot put resources into financial literacy, yet we have targets that we need to meet. Now this year, in May 2022, at a meeting organized by AFI in Costa Rica, the issue of financial health came up, and it clearly stipulated the impact of financial literacy on an individual to strive and achieve financial health. And this is where we got some answers for the financial service providers present. Now, when it comes to the issue of financial health, we found that it is with no doubt. I'm going to skip a few slides, but we shall share this, don't worry. Let's focus here. We found out that if a financial institution or a financial service provider focuses on financial literacy, and more so the financial health of your customer, you are able to get 3 times more recommendations. You are able to get 2 times more opportunities. Okay, I can't read this clearly, but from the data up here, you can see that your business will be multiplied even up to 5% more, especially from referrals from the people that can testify that this institution supported me to transition my financial life in the right direction. Therefore, we found that financial literacy ultimately leads to financial inclusion and financial health. Of course, in some jurisdictions, they look at financial health as economic inclusion. These are the new topical issues that are coming up in this space that we can also be mindful of. There is a lot of implication when it comes to financial health. If a bank or a financial institution looks out for the well-being of their customers, train them to save, train them to manage loans well, train them to utilize their monies the right way, budgeting, saving, etc. This customer is a better quality customer, and they will make your services and transactions much easier if you deal with this kind of a customer. So indeed, there is a business case for you. When it comes to inclusion, a lot has already been said. Inclusion is also impacted through financial literacy. Now, ultimately, at the end of this all, what are we trying to achieve? Under the financial literacy agenda going forward, we are seeking for more collaborations. So when we call upon you to participate in an event, in an activity, etc., kindly come forth. Because from these activities that we carry out, we are able to transform the mindset of the customer such that this customer comes to you, the service provider, to demand for your services in a way, in a manner that is a win-win position for both of you. So we need more collaborations, more partnerships to move this agenda in the right direction. We are seeking for incorporation of financial literacy in almost all government programs. Imagine a world where the government representatives or the public institutions are financially literate. They will then be better informed on how to manage their personal resources, but most importantly, the resources of the public. We are looking, thank you, we are looking at CEOs. I believe this room is full of a number of CEOs. The change needs to come from the top. CEOs need to be knowledgeable. When NSSF comes and rolls out this program down to the last front desk officer to be able to transform the customer's financial understanding, it comes from the top. But we are in a world where CEOs are also struggling with financial literacy. No offense, it's a fact. Okay. So we need, so we need this change to start from the top. And when this is trickled down to your 500, 200, 1,000, 5,000 staff, we can ultimately have a trickle-down effect to transform the lives of more Ugandans. We have also been looking forward to seeing that we basically have the Financial Literacy Association to be able to pull all the stakeholders together. We have unfortunately not been able to do this under the roof of the central bank. However, with constant collaboration and closer working with the Financial Literacy Association, we hope that we shall be able to move this agenda forward. So ladies and gentlemen, as I close, the team that you saw standing up here with me can always be approached if you are interested in adding voice or being part to the next phase of financial literacy in Uganda. That is the Financial Literacy Association. Please register with them and we shall be waiting to hear from you. But all in all, financial literacy, if everyone takes on their contribution and their responsibility in moving this agenda forward, it will transform our lives and the lives of our loved ones. Allow me to stop there for now. Thank you.
They say that train a mother, train a what? Train a mother, train a what? It is not by mistake that Tilda is in charge of financial literacy, because ladies have a way they handle these things. Can we once again give Tilda a big round of applause? How many of us, the men here in the room, how many of us have tried this budgeting thing by show of hands in our homes? You sit with your wife and you call your children and you sit and tell them that this is our money, and your madam tells you her money, and even you mention your money, and then you start. By show of hands, if you have tried it in your home, I now see why Tilda said even CEOs. This literacy thing can be very, very interesting, because under I see the MD of NSSF saying it's not possible. I think this literacy thing can be very, very interesting, because under normal circumstances, you have to sit as a man, you say that me and my wife, how much do we earn? We say we earn a total of 10 million. This is how we intend. You also tell your children, so your pocket money will be 20,000. But I think for the elders, it's applicable a bit. But for the younger couples below the age of 30 plus, The power of social media has failed our budgeting. Recently, I was trying to argue with my fiance over the issue of our birthday. The birthday of our young son has been a problem. We were saying we need decoration, but decoration alone was £1,000,000, which is my salary. Then I said, how do we plan in an economy where social media, we have to maintain a lifestyle of saying all is good, but indeed when all is not what? So, ladies and gentlemen, when you're talking about financial literacy, there are a lot of aspects we need to be able to communicate. But I think we also need to get into a space where we communicate to the young people that it's okay to hold an Infinix phone, not an what? An iPhone. But in a state of so many things, we have to make sure that we have a role to play. Ladies and gentlemen, we've just had a conversation on financial literacy and financial inclusion. And we are following the theme, enhancing financial inclusion through digital financial literacy. So ideally, it is important for us to make sure that on every single day, we are trying to communicate this through our homes, because all of us beyond our institutions, we have a micro role to play in our households. Allow me once again, I see a lot of people seated on tables with registration sheets that are not written on. And then I start to imagine if they got excess, but we put the exact number. So please make use. I'm still also seeing QR codes that are facing me, meaning that the QR codes have not been moved from the time we put them there. And it's not by mistake that we put them, that we want you to be able to access that information. But also, I think that we did not appreciate a lot of the trainers. Can we once again clap for the trainers that Tilda brought here? We have put some literature on your table that speaks onto the works that they've done. I see here Miss Joan training internal auditors. We have Miss Ratib Ismail, Mr. Ratib Ismail training VSLS in Koboko. Those are the works that different people are doing in different communities. But also, if you have a challenge, for example, if you have a home that has about 10 children, some for your brother or your extended family, and you have challenges in terms of finances, please invite these trainers to impact some knowledge in your homes, because it will also have an impact in terms of the aggregated. Without any further ado, ladies and gentlemen, before we head into our sessions, and for session levels, I'll invite my colleague Rita from BOU to support. Allow me to inform you that over there, as you enter this place, we have a number of vendors into financial inclusion and financial literacy. One is the Deposit Protection Fund, which we all know. They have a role to play in this space, so feel free to visit their desk. We have U-Learning, we have Agency Banking Company, we have B-Money, B-Wiser, and allow me mention finally that we have High People, which some people call hip-hop. So High People, the CEO is also around, Mr. Innocent Kawoya. That organization recently won the award of Best Financial Inclusion Organization at East African level, and I think they deserve a big round of applause. So feel free to make your way out as you're having coffee or in any break to have a feel of what's happening. Our online audience that is streaming live on YouTube and Zoom is somewhere around 200 to 250 persons, and I think they are also doing well. Allow me ask if there are any questions for our first presenters, so that we can take on. We can actually take on one or two questions. Hashim from BOU Secretariat, if there are any online questions, please aggregate them. We'll also present them and see to it that Tilda and Alex be able to respond to the questions of financial inclusion and financial literacy. In the building, do we have any questions that we can be able to have, one or two that we can be able to take on before we enter our next session? It looks like all of us here are really financially literate. Can we clap for ourselves? Whether you are literate or not, just clap for yourself. Because we've been trying to interrogate those aspects and it's still a challenge for us. At this point, ladies and gentlemen, allow me to appreciate Rita as she makes her way here to lead us into our next session.
Thank you, MC. Ladies and gentlemen, we once again welcome you to the Financial Inclusion and Financial Literacy Forum. Allow me to recognize the presence of Mr. Musoke, the MD of the Uganda Retirement Benefits Regulatory Authority, the ED actually. I would like to recognize the presence of the Financial Services Commissioner, Mr. Moses Ogwampus. The MDs of various commercial banks, we've managed to see Baroda, Centenary Bank, MDs of payment service provider companies that we license, Micropay, Mcash, Your Uganda, Wave Transfer Limited, and also the Executive Director of Financial Sector Deepening Uganda, Mr. Patrick Oketa. Thank you for coming. The ED of the Capital Markets Authority, Mr. Keith Kaliegira. We have representation from the Deposit Protection Fund of Uganda by the Head of Communications. Financial Intelligence Authority, thank you so much. We shall keep recognizing as we get the registrations. Now let's move to session 2, where we'll have panelists. And this session will be looking at digitization of financial services and digital financial literacy as a tools for enhancing financial inclusion with special focus on the last mile client. This session will be moderated by Mr. Peter Kaumi, who's the General Manager of InterSwitch Uganda. Please welcome Mr. Peter. The panelists will have Mr. Andrew Kawede, who's our Acting Director, the National Payment Systems Department at Bank of Uganda. We'll have Mr. Chris Lukolio, the Digital Country Lead, United Nations Capital Development Fund, which we commonly call UNCDF. Ms. Emma Mugisha, the Executive Director and Head of Business Commercial at Stanbic Bank. Mr. Kaumi, where are your panelists? Please make your way to the front. We'll have Mr. Richard, today I found out he has another name, Mr. Richard Patrick Biarugaba, the MD of NSSF. In the building we have 2 Richard Biarugabas. So to differentiate them, we'll put Patrick on the MD of NSSF. Thank you very much. Peter, the floor is yours. You could use that. Do you want to use that?
I'll use one. Thank you very much. Rita, thank you. A very good morning, everyone. A very good morning, everyone. Thank you. All protocols observed, and a huge thank you to Bank of Uganda for keeping the financial literacy discussion going. Rita, before we start, how long before you come and whisper into my ear? 40 minutes. Okay, and kindly help me find Mr. Kawere. Okay, so this morning I've been asked to moderate a session on the digitalization of financial services and digital financial literacy as tools for enhancing financial inclusion with a special focus on the last mile. Digital financial literacy involves the dissemination of digital literacy alongside financial literacy aimed at empowering a financial consumer's informed choice to access and utilize suitable digital financial services. We've heard a lot today about the Global Findex Survey of 2021, and you will have noticed that it noted that digital financial services, largely driven by mobile money, has been an important enabler for financial inclusion in sub-Saharan Africa. Admittedly, the COVID-19 pandemic was also noted to have boosted growth in digital payments. Additionally, the Bank of Uganda Financial Inclusion newsletter from April 2022 also noted that in Uganda, the number of registered mobile money users stood at 32 million, with over 22 million active, being those who transacted in the preceding 3 months. This underscores the far-reaching need for consumer protection and awareness that effective digital financial literacy ought to address. According to the findings of the Financial Capability Survey that is being launched today, 66.7% of adults own a mobile phone, with 21% of those adults owning smartphones. So today we'll be listening from the panelists about what they're doing around the mobile phone. These findings further indicate that consumers are more conversant with the risks associated with losing their digital devices and theft of their personal identification numbers, their PINs. However, the risks inherent to the use of digital channels, like hacking that leads to fraud, cyberbullying, phishing, non-transparency of transaction costs, farming, keylogging, etc., are less known to customers. Risk incidences from digital financial services and products negatively impact on consumer confidence to use these services, and therefore must be addressed if we are to achieve the financial inclusion goals. And now that all the panelists are here, we'll get started. Okay, can you hear me? Thank you. Andrew, Richard, Emma, and Chris, thank you very much for taking the time out of your morning to join us for this discussion. Andrew, we'll start with you. We've had quite a lot from the central bank about what's been going on both the financial inclusion drive and financial literacy in general. When Alex was speaking, he spoke about the enactment of the NPS Act and the regulations thereafter over the last couple of years. Could you just walk us through why the National Payment Systems Act was put in place and what the impact of this law has been on digital financial services in general, payment systems, and on financial literacy? Thank you.
Thank you very much, Peter. Good morning, ladies and gentlemen. Good morning, panelists. It's been a journey in terms of digital financial services, and I think the evolution of digital financial services, we can stretch it to maybe the past 10, 15 years and try to digest the developments within that period. Of course, the past 7 or 8 years registered significant acceleration in the delivery of digital financial services. But if we go back to 2005, when the central bank introduced electronic funds transfers, and then the RTGS, real-time gross settlements, and then more recently, we saw the automated clearinghouse with check truncation capabilities, and then the agent banking platform, the shared platform, 2017. We've seen developments now. That is from the banking side, and those are wholesale systems. But if we move to the retail side, mobile money, cannot be overlooked. It's been a flagship solution in the digital financial services space. From 2009, when we saw the first partnerships between the pioneers back then, MTN and their bank partners, to what we see today, there has been a massive growth in these digital services. Beyond those, we had the likes of Bankom. I'm happy, Peter, you'll be proud, that Bankom, survives as InterSwitch today. But those are some of the things we have seen. Now, with those developments, today, in terms of mobile money, as an example, we're talking of about 50% of the Ugandan population, 23 million mobile money accounts that are active. That is about 50% of our population. So it is a significant evolution that we have seen. But with this said, this evolution was not supported by a solid regulatory framework. We didn't have a solid regulatory framework. And much as the potential was seen, we lacked that solidity in terms of regulatory framework. Mobile money, as an example, was regulated indirectly through guidelines, and this was between the central bank and the Uganda Communications Commission. So because of that lack of clarity, we were unable to harness the full potential of these digital financial services. And this is what triggered the enactment of the law, the National Payment Systems Act and the National Payment Systems Regulations. These laws, first of all, dealt with the lacuna in the regulatory environment, and they massively, or rather clearly, assigned the responsibility for digital financial services, and this has supported developments in the sector, like I'm going to highlight. So in a nutshell, in terms of what prompted the enactment of the law, it is a question of there was no clarity in terms of regulatory mandate, and that exposed consumers to loss, of their value. But also there was no clarity in terms of other regulatory aspects, such as issues to do with risk management, issues around cybersecurity standards or cybersecurity requirements, and service quality, interoperability, and matters of the like. That is what prompted the enactment of the law.
Thank you, Andrew. And what's been the impact since the law was enacted?
In terms of impact, we've made, or rather we've registered, very, very good progress. For a start, the clarity in regulatory mandate, created certainty. Certainty, first of all, from the investor point of view. The practitioners, the guys in the trenches, now have a clear light in terms of how do you get regulated, what are the requirements of the regulator, what are the regulator's obligations as far as digital payments are concerned. Now, that is a very, very key thing. Then, on the other side, there is trust from the population. The masses now know that the central bank is directly responsible for digital financial services and electronic payments in general. And that has had impact in terms of growth, like I'm going to highlight. But before I get into the numbers, the regulatory clarity and certainty has attracted funding. You'll note that a good number of the fintechs or players in the payment space have benefited from venture capital funding. You saw the reports for Safe Border. Safe Border was one of the first beneficiaries from the Google Africa Fund. You've seen the reports about Cheaper Technologies, which has an active subsidiary in Uganda. I know that Wave, has also attracted some funding, and there are so many other smaller players, that have attracted funding into the market. So we see that as a key outcome of the regulatory framework. But beyond that, we've seen increased adoption in terms of public use of digital payments. Of course, there is a lot of room for further adoption, but we are very happy with the development so far. We see increased use cases in things such as healthcare. One of the recently licensed players is called Clinic Pesa, and they have a healthcare solution. We have use cases in the transport sector. Safe Border is an example for that. We've seen use cases in the savings and investment circles, and all this has scaled up the transactions. If you look at the year ending June 2022, digital payments in general went up by about 37%, and the total transaction value for that year stood at about 157 trillion shillings. That is about $40 billion, if I'm correct. Of course, it's a pass-through measurement, but the scale of value going through these digital payments, says a lot. And the number I've given, that 157 trillion, excludes internet banking. It excludes, some of the channels that are within the conventional banking space. So we see significant growth. The volumes are phenomenal. 4.8 billion transactions within that 1 year ending June. And this is information that we are very, very proud of. The other thing that we see as I close is around innovation. One of the key things that the law introduced is the regulatory sandbox. And this has permitted the regulator to work with the practitioners to test innovations out there without or prior to getting licenses. And through this sandbox, we've seen some success stories. Wave is an example. They came with a solution around QR code, based digital transfers. And currently, we have some ongoing innovations that are being tested by Absa Bank and Kulipa Technologies Limited. So the sandbox has created room for incubation of innovations, and we expect that this will continue, scaling up the volumes and values.
Thank you very much, Andrew. That sounds very exciting, and those numbers are just quite impressive. Emma, we'll come to you, and we'll stick with banking for a second. Andrew spoke about harnessing opportunities. I'd like your view. I mean, you sit with one of the biggest banks in the country. What is Stanbic Bank Uganda's view on all of these emerging developments in the industry? And do you see any risks that might come out of many financial services consumers adopting these?
Sure. So maybe I'll start on a personal note. When I joined banking many years ago, my aspiration was to join the bank with the biggest branch network. When I finally got there, that biggest branch network was no longer a competitive advantage. So the biggest change has been that banking has transformed significantly. Having 100 plus ATMs and branches is not necessarily success. So the biggest change in all this has been that transactions have moved away from the branch, the traditional way we always transacted, into the digital space. Agency, not yet quite digital, still cash, takes a big portion of our transaction volumes at the moment. So again, that space has grown significantly in the last few years. But again, what has happened to banking? We've had to change strategy. We've had to adopt with our users and our customers in terms of digitization. So moving away from physical cash to mobile banking, enabling mobile money as well, because most of us will receive our salaries in our bank accounts and then immediately transfer through bank to wallet into our wallets and transact there. So partnering in that space has been very key in the banking industry. Are there risks? Of course there are risks. In the past, you had banking hours from 8 to 5. So your risks were basically from 8 to 5. Right now, banking is continuous 24 hours. Probably at the time you're sleeping at midnight is when the biggest fraud is happening at volumes that we didn't see when it was physical cash. So there's a lot of risk in terms of cyber risk, in terms of being able to be hacked as systems, but also because of the partnerships, there are many handoffs between different partners. So third-party risk becomes really, really key and one we have to manage. Our strategy is at risk. Are we a bank or are we a technology company? You find that banks are hiring more data analysts and more software engineers than traditional bankers. So what happens to the rest of us that grew up as traditional bankers? Either we have to retool or we have to find other things to do. So yes, there are risks, but there's also excitement around the opportunity, excitement around what can be done from an innovation perspective, around partnerships. I mean, the partnerships that we see in this innovation space are amazing. There's opportunity in terms of being able to reach more people. The banking industry traditionally has probably had up to 2 million accounts altogether. The mobile money guys are 25 million and growing. So how do we get to reach the same level? And that has come through partnerships with circles, with now the next generation of financial institutions, because there'll always be a space for a bank. The question is, how do you partner such that you share value, as opposed to the banking industry trying to hold it all. So yeah, there's risk around our strategy. There's risk around, actual risk of losing money, but there's also great opportunity in terms of partnerships and in terms of reach.
Thank you, Emma. Hopefully, we'll get the answer to the question of whether you're a bank or a technology company today. Yeah? Okay, so Richard, I'll come to you now. Often when we hear people talk about financial literacy, financial inclusion, the discussion is centered around banks and more recently around mobile money and now fintechs. And I must applaud you for some of the things we've heard today about what the NSSF is doing with employees. I'd like to just take a moment to ask you, so what exactly is it you're doing? What tools have you rolled out, both internally and to your members? Why are you doing this? And what impact has it had, both internally and to the members?
Thank you so much, Peter. So, by the way, was it Linda, the lady, Rita, I am the original Richard Biarugaba. The other Richard is the fake, made in China. But on a serious note, I'd like to start with two stories. So 2004, I was a CEO at one of the banks, no longer existing, but great bank called Nile Bank. And I recall going to a Uganda Bankers Association meeting. We used to have them monthly. I don't know what they do these days, but the CEOs would meet with the central bank once a month. And I think they would present the financial statements, the monthly data, and then would talk a little bit about the banking. So anyway, I remember going to one of those meetings, and there was a CEO who shall remain unnamed, but he worked for one of the multinational banks. And at the time, not mobile money, but the mobile phone was sort of taking root. And there hadn't been a lot of innovation around the mobile phone. And I recall me telling the CEO of this bank that, you know what, one day I believe that the mobile phones will take over our business. So this guy was a little bit older than me at the time. He laughed sarcastically, but certainly feeling satisfied. And he told me, Richard, let me tell you, my son, banks are institutions of trust. The only thing that banks provide to the market is the trust that their money will be there forever. What will telecom companies sell to the public? There's absolutely no trust. But as you've heard from Emma, we now know, or we now don't know, whether banks are banks or they are telco companies. So that's the first story. The second story is 2015. I was CEO at NSSF, and we just done our strategy, 10-year strategy, which runs 2015 to 2025. And I was addressing all staff in Chigo, Serena. And I made this huge announcement. I said that by the year 2025, NSSF will be a branchless company. And of course, there was garnish of teeth, there was a big sigh in the room, and everybody who literally had anything near him wanted to throw it at me. And I recall one of the staff stood up, very, very, very animated, and said, "What will my mother in the village do if there are no branches at NSSF?" So I said, well, they will still get service. Anyway, let's bring it back to today. So I finished with my two stories, Peter. And what I would like to tell you is that today, 10% of our transactions happen in our branches. 90% of our transactions happen online. In fact, I can say without a matter of shadow of doubt that hardly any customers today come to us to do any business. They all do it online because we've been able to put there the tools for them to do that. Of course, we've got a tool for the smartphone. We've got a tool for the USSD. We've recently introduced even a smart card with a bank, in partnership with a bank. And by the way, the banks in the house, please come and we partner with you because you will need us, as you've heard. But more importantly, we have moved the bar to technology. I always tell people that the biggest fear for me every single day is somebody who is going to come up and disrupt our industry. And that moment will come. A 16-year-old, 17-year-old kid who will come up with an app which makes NSSF totally irrelevant. Because what is NSSF? NSSF is a pension provider that uses the law of Uganda, CAP 222, to be able to raise contributions from our members on a monthly basis with a promise that at retirement they will get their money. But you don't need a law to change people's behavior, because as we've seen, with due respect to Andrew, I know he's very happy that the NPS law helped them to regularize this industry, but these guys were ahead of you, all right? Think about it. You were just playing catch up. So your law is, is just coming up to sort out what the entrepreneurs, the people who are innovating have thought about. And they are thinking ahead, right? In fact, I'm sure if you look at your law now, it's probably a cake because the guys have already gone forward. So guys, technology will definitely take over our lives, right? And all of us, if we don't really pay attention to the trends, we will all become irrelevant. I don't know what your question was, but the point I'm trying to make is that we've been very good at following the trends of technology. We've been able to give our customers, follow with them, and give them options, and we promise that we'll continue to do that. With regard to financial literacy, which I know is the big deal today, I would like to say that we realized that we needed a purpose. I don't know how many of your institutions have a purpose. NSSF did not have a purpose. So we created a purpose because we felt that if we have a purpose, we will then be able to really perform well. And permit me to actually read word for word our purpose, because you'll see why it's so important for every organization to have a purpose and why we believe that financial literacy is a big deal for us. Because if you don't have people who are financially literate, you won't have customers. That's why we put our resources into financial literacy. We make sure that everybody has an opportunity to learn why financial literacy is important for them, why they need the tool of knowing how to manage their money, because our purpose is to make lives better by passionately dedicating ourselves to making saving a way of life, to enable more and more people to improve their well-being. That's our purpose as NSSF, and we believe that to drive that, everybody needs to get involved in the money economy, everybody needs to save, everybody needs to prepare for tomorrow, regardless of whether it's retirement or whatever else that comes along the way. And therefore, if we deliver on our purpose, we know that we'll get the customers, and we know that technology will help us to do that very well. And as I say, I don't remember your question, but I'm sure you've got enough to answer it.
Well, you have answered it. And then I have a table full of fintechs there, hoping that the invitation to banks is also open to fintechs. So Chris, I'll come to you. Now, the UNCDF is not an institution that's new to many of us in the space. You've been here for quite some time now. And financial literacy, digital financial services, etc., is what your focus is. Could you just share with us, what's been happening in the space recently, and what key milestones you've achieved over the last few years?
Thank you so much. So it's good to be part of this discussion. As many of you might know, UNCDF focuses on those who are in danger of being left out of this entire equation. Because as we talk about financial and digital literacy, think about your rural farmers, your refugees, small businesses that are failing to access these services because they don't understand all the lovely menu items that you're putting up and the languages in which you're developing these tools. And so that's where the focus is. But what we've done is to engage with policymakers. Andrew talked about the National Payments Act. You've also, I think many of you will be involved in the review of the National Development Plan. All these coming together involving aspects of digital transformation, digital literacy, because there's a recognition that this is important. And so I think that's a huge milestone. There is also, I think, importance in when we talk about digital and financial literacy, what tools are we using? Because it's not embedded in traditional curricula, right? And so developing these tools and rolling them out again to those communities that otherwise would be left out of this discussion. So working with, yes, humanitarian agencies, but also the private sector, because it has to be something that's provided with, it has to be sustainable. It can't be that a humanitarian agency or UN agency is supporting somebody to do it. And so developing those tools and then rolling them out to these communities. And then lastly, we've seen now several programs training over 2 million people just between last year and this year on these tools. But really the idea is that it's done sustainably, that we can awaken that awareness within the private sector, with several of the fintechs here actually developing business models that are geared towards addressing that last mile gap. But providing this literacy as a part of the business that they provide. So I'm developing my financial literacy because then I can open a bank account, I can access loans, I can access resources. And last but not least, we've partnered with various government entities, various development partners to develop what's called an inclusive digital economy scorecard. Now this allows a country like ours to assess itself on various aspects, infrastructure, policy, but also on skills. So where are we today, but where do we want to be tomorrow? So what priorities can we set in developing the skills of our citizens? And that's important as well. So these are some of the things that have been, these are some milestones that you can look at to help us in advancing this agenda of digital and financial literacy, specifically to serve those underserved communities that might be otherwise left behind as the rest of us advance, become more productive in this digital era. There was a second question. I don't know if you had asked it already. I know it from my notes.
I will ask it. Don't worry. So at the start of this session, the Deputy Governor said we were here to kickstart the development of the next National Financial Inclusion Strategy. So as I ask each one of you the next round of questions, I request that you just have this in mind. And Richard, at the risk of having my question forgotten again, I'll start with you. So it's evident that you've had significant success in adopting technology into the operations of NSSF and rolling this out to the members. What learnings can you share with other stakeholders who may want to do the same thing in order to achieve the same level of impact and in order to reach the last mile?
So this time, I remember the question. It's about learnings. The first one, experiment, pilot. We've actually had a couple of failures, big time. The one that really comes to mind is 2014, we introduced a card, which we handed out to a couple of people. It was a very useless card. It was meant to replace a plastic card that we had before, but this card had absolutely no value because all it did is give you your NSSF number. You couldn't use it in an ATM machine, and there was absolutely nothing else you could have done with it. We thought it were being progressive because it was digital, it had all your data on a little chip, but apart from that, it was very static and it used absolutely nothing. So you've got to pilot, you've got to look at the opportunities that are available before you are able to basically go forward. So I would say that's the first one. The second one, certainly that we've been able to learn, is that our customers are always ahead of us. It's actually incredible how far ahead our customers are. They've obviously got a lot of other things that they're seeing out in the market, even abroad. They're more discerning, they're more informed. You know, technology has made sure that there's so much information available, and people are always looking for the next best thing. So always have a plan B for whatever you're going to do. So when recently we introduced the midterm access, we had 60 days to put all the systems in place. We had great technology that we'd built, a little engine that we'd built in there, and we found that on the last day, just before the launch, the technology just gave up. And suddenly, we felt that we needed to bring in our staff. So all our staff became customer service officers. You remember we opened up a couple of locations even at the Kololo Independence Ground in order to serve our customers, to receive manual applications. So the other thing I would like to say is that you need to have a backup plan, a plan B. I recall the plan B was actually hatched up almost 2 or 3 days just before the kickoff. And fortunately for us, it was only useful on the first day because we had the long queues, but the following day, the engine was up and running again. And as it turned out, 40% of our transactions actually were done online eventually, with 60% coming in manually, but largely driven by the fact that on the first day, the technology actually failed. So that would be my second learning. The third learning, of course, would be protection against cyber attacks. I think Emma talked about the fact that your service is available 24 hours just because of the technology, so you need to be aware. So, you know, make sure that you've got all those wonderful things that the people in technology tell us to do to be able to protect your systems. You have your DMZs, you have your lines of defense, you've got your backups, you've got your DR sites able to take over should your first service fail, and so on and so forth. So I would say that because of the technology, all the things that they've told you that you need to do to protect yourself, you know, fight against phishing and all those horrible things that people do to get into your database become important, especially if you've got a huge database as such as our own. So I would say that those would be the learnings, but I think for me the big learning is you should always try and be ahead of your customer, because your customer is absolutely on top of their game, and therefore have that little group of people in your organization who are always looking out for the environment and what's happening and what might be able to affect you, so that you're always ahead of that game. And we've been able to do that through collaborations, partnerships with Inbox and some of the other fintech companies that are coming up with new ideas. We run very good idea getting from our institution and also from outside of our institution. We pay for it, of course. So it's almost like trying to invest a lot in your research and development so that you can keep ahead of the game. But I think that is worth it because it will always keep you in the game, but not only in the game, but also ahead of the game.
Thank you, Richard. And it's evident you're becoming quite the techie too. So Emma, from the bank's point of view, what do you want to see in the new financial inclusion strategy in terms of financial literacy, and what do you think both banks and other institutions like yours and regulators need to be conscious of?
Okay. So one of the things we've learned over the last few years is that we should actually lead with financial literacy on all our segments. So before you give a loan, before you open an account, can you have a conversation around what your customers' view of their money that they're making, their saving, their investment, their plans for the future are, so that you're in sync with what they want for their lives. But what that has done is that we've been able then to find that we solution for our customers better. So we need to embed financial literacy in everything that we're doing. This is not just on a personal basis, but even for business accounts. I recently moved from corporate and investment bank to business banking, and I find that after COVID, businesses are more aware that they should have reserves, that they should have savings for the business itself. But how do you have this conversation to say, these are your options in terms of investment, these are your options in terms of reserves, how do you build reserves into your business? So embedding financial literacy at all segments of our customers is important, and it's important to have that hard conversation. Sometimes you don't need a loan. Sometimes you can't afford a loan. And as a bank, we should be responsible enough to tell you that you cannot afford a loan. I think in the past, we were all, as financial institutions, trying to be the first to give that loan. But after being burnt a few times, we've learned to step back and make sure we lend responsively. The other thing is to include protection and insurance in our conversations with customers. The insurance sector and the banking sector were completely different. Right now we complement each other, because as I lend you my money, I need to make sure, if I'm lending to you as a farmer, that you are protected in case the weather goes against you. So how do we incorporate all these financial services, democratize them in terms of access? For example, treasury bonds seem to be the in thing right now. How do I give that access, quick access, without having to go to the bank, fill out a long form, get a picture, go to central bank? How do I democratize that investment such that on my phone I can opt to save and I can opt to invest? So again, we need to know what our customers' needs are and to be able to give them access now that we have technology, and to democratize that access for all the different areas of financial inclusion.
Thank you, Emma. We all don't like those long forms. Chris, I'll come to you. When Alex was presenting earlier, he spoke about how difficult it is to reach the last mile. And at the end of his presentation, he said that what the central bank really needs is more partnerships, more collaboration. Could you speak to us about some of the plans that the UNCDF has into the future?
Thank you so much. And I'm glad that he ended on that point, because a key thing that we see going forward is to try and foster cross-regulatory collaboration. You have, I think you mentioned there are several fintechs in the house. One day you're a ride-hailing service, next day you offer a wallet, and suddenly you're reporting to BOU. Next thing, you're trying to list on a public exchange, and wait, Capital Markets Authority is your regulator. And all these aspects, ultimately you are trying to serve a customer who needs to understand what you do and what value you deliver. And so fostering that collaboration will hopefully also drive collaboration in delivering the type of literacy that allows our citizens to use these services. So that's a key focus, and one that indeed Bank of Uganda has partnered with us on in some conversations a couple of weeks back, but also all the other authorities, UCC and so on, to try and drive that and indeed have that filter into better financial and digital literacy. The other is, several of the initiatives that, UNCDF works very closely with the private sector. We try and enable the piloting or the scale of innovative business models to reach the last mile. But you end up, through these initiatives, you pilot something, you reach a couple 100,000 here, a couple 100,000 there. So how do we drive mass adoption and scale? How do we get millions of Ugandans to use these services? And so it is indeed, it's not just literacy for literacy's sake, it's literacy for accessing finance, literacy for accessing education. And so bundling these services, but also using platforms that reach large addressable markets. And so these are some of the things that we have on the horizon. And also UNCDF, I think for several of us in the room, you've known us for our support using, whether it's grants or technical assistance. We hope to expand the number of tools that we bring, that we have at our disposal, so that there is, again, different purposes are served by different tools. And so we hope that we can be an even stronger partner to this sector, to this industry, and engage with many more of you, but also
foster more of this collaboration and literacy to provide better services to the last mile. Thank you so much.
Thank you, Chris, and we look forward to all that. Andrew, we'll finish with you. And I'm hoping that some of the things that you've been hearing from the other panelists are exciting to you and can be adopted and incorporated in some of the work by the bank. But could you share with us some of the efforts from the bank to enhance digital financial literacy from the NPS department? Thank you.
Thank you, Peter. As a bank, I think what is at the center of our initiatives is first of all recognition that promotion of digital financial services is largely anchored on trust. So that is a fact that we wholly appreciate, and it's what is driving most of our interventions. And at the center of our interventions are consumer protection initiatives as a priority for the digital financial service providers. And we are working with the Minister of Finance and the Minister of Justice to get these expedited. These regulations will, for example, require the digital financial services providers to come up with annual programs on financial literacy and digital financial literacy to be specific. So we think that with these regulations in place and these concerted efforts to create awareness in terms of the digital space, we shall be able to continue building trust and scale up digital financial services and financial inclusion in general. The other point, and I will be brief on this, is something that Chris has alluded to as well, and so did Emma, and this is a stakeholder collaboration. The central bank came up with an e-payment strategy, which we developed in partnership with the private sector. And one of the key pillars thereunder is stakeholder collaboration. So we've scaled up collaboration with our partners, both in government and even the development community. And I would like to thank some of them, of course. Chris is UNCDF has been a key partner. With UNCDF, one of the things we're doing is to develop core messages for digital financial literacy, and we intend to incorporate this into the financial literacy curriculum that we use to train financial literacy trainers. We are working with UCC. You might have heard of the Tom Ferrer campaign, which ran a few months ago, and we are happy that the partners have supported us in those initiatives. We have also set up several forums that try to bring together the different stakeholders in the financial sector. The banks, for example, on the one hand, have come together with the payment service providers under one umbrella body, chaired by the Deputy Governor. And through these multi-stakeholder collaboration initiatives, we are scaling up digital financial literacy and general financial literacy awareness. Thank you.
Ladies and gentlemen, this panel aimed to help the participants and listeners to understand the current regulatory environment for digital and electronic payments, to highlight some of the sector developments on DFS and digital financial literacy, and of course to receive an update on the efforts by the NSSF. I hope we have achieved the objectives of this panel, and now hand back to Rita from the Central Bank to thank you. Thank you, panelists. Thank you very much.
Ladies and gentlemen, let's appreciate this panel that has taken us through the importance of technology. As we all appreciate that as the world is evolving, so is the financial sector, and we need to constantly work together. Like Andrew alluded to, our multi-stakeholder nature of the National Financial Inclusion Strategy. We get partners from the private sector, government departments, we have the development partners, and all of us that are involved in these financial inclusion initiatives. I would like to ask us present here and those online if we have any questions that we would like addressed. I'll take about 2 questions because of time. We have microphones on our tables, so I'll be looking out for anyone who has a question. And also just to inform you that we've had tea, and please continue taking some tea as we continue discussing today's topic. If there are no questions, I'll ask my MC, Mr. Ibra Kalule, to take us to the next session as we call the next panelist. Thank you.
Ladies and gentlemen, that was our first panel, and I'm sure that we have been able to appreciate the direction that giving a discussion on financial literacy and financial inclusion. Instill the spirit of appreciating the different MDs. Allow me to appreciate the presence of the MD of Absa Bank. Allow me also appreciate in the same spirit the chairperson, Payment Services Providers Association, Dr. Grace. Thank you very much for being present with us. And also allow me in the same spirit to appreciate the presence of the FITSPA chairperson, Ms. Josephine Olok. Now, because all of us today are talking about literacy, and you can only be literate if you have knowledge. And for some schools, they've also gone ahead to say that knowledge is power. Allow me to appreciate the presence of certain teachers who play a critical role in this space. In this regard, allow me to appreciate the presence of the Executive Director, Bankers Institute, Ms. Goretti Masade. Thank you very much for your presence. For her, because of the love of teachers, allow me request her to stand up to appreciate her presence. Allow me to inform you that she's not in the category of teachers who are saying we need a pay rise. She's comfortable where she is. Madam Goretti, thank you very much for being around. Like Rita mentioned, I do not know if we have any questions, but Hashim, our online audience, I'm told that is tapping somewhere into 300 participants, which I think we're very grateful. Our people who are on Zoom and YouTube, thank you very much for making time to be with us. We'll continue with the discussion on our session. The next session, we're supposed to have a health break, but we've also agreed that let's have a working break because we're already pressed on time, and matters of financial inclusion and financial literacy are very, very important. I like the messages that were going on with the different panelists, and some of them, as they continue to present their key messages, that spoke to me. And of course, while I was seated over there, as Richard of NSSF was speaking, and allow me to refer you by your first name, as he was speaking, there was a gentleman who was telling me, I don't care how much is going to convince us, but me, I'm coming for my mid-term access, mid-term access, mid-term access. And then in my head, I said, I think the discussion of money really needs to be scaled further, because now everyone really picks a message that speaks to them. But I like the fact that one of the speakers mentioned how all these are supposed to marry. Because initially, as Richard mentioned earlier, no one thought about the relevancy of mobile phones. Today, mobile phones are playing a critical role in terms of interacting with your banks, interacting with your network operators, to be able to move money from one place to another. And it's important as providers in this space, we also understand and appreciate the role. And of course, one of the speakers, I think Madam Emma from Stanbic Bank, talked about insurance. How many of us here have insurance, not for cars? You have an insurance policy that you bought individually, by show of hands? Yeah. We see that the hands are also. Now it speaks back to how much information do we have in terms of literacy. But also, we will also appreciate that insurance comes at the tail end to guard against risk. So how do we be able to marry these concepts? Because I've had a couple of people that we meet in different communities who say, for me, I took a loan, and the bank reduced my money. I asked for 10 million, they gave me 8 point something, but they said some percentage one was on insurance. But I don't know how insurance plays a role. Now that goes back to the commercial banks the different institutions that provide loans, how do they get into that space to make sure that the last person who's taking their money, they know what insurance is doing? I see that we have a couple of hands. We have a hand over there. Rita, I meant to request the team from BOU if we have a movable microphone. We get it over there. We have some microphones on the tables, but some tables indeed do not have. We'll keep recognizing people that walk in, but let's also take on some questions. Sir, please note that I'm just moderating. The questions are not coming to me. You fire the name and the question. And someone can start to put you on a gun point here and fire you a very difficult question. Before you know it, you want to go take off your coat. Your name and straight up to the question, sir. Don't worry, the microphone is coming to you.
Thank you. Thank you very much, moderator. My name is Vincent Tumwejuche, CEO, FutureLink Technologies. My question is directed to Andrew, and I also admit that his mandate may not be adequate to actually address this, but I bring this up because this is a launch of the financial inclusion strategy formation. Richard mentioned something that I think is very important for us to take note, identifying other services that are not necessarily within your mandate, but which are key barriers to the work that you do and geared towards achieving your purpose. We are talking about financial inclusion, but to an ordinary farmer, a dairy farmer, who sells their liter of milk for 600 shillings, who produces 10 liters in a day, and their transaction fee is 1,000 shillings, meaning that every day they would have to part with 1.5 liters worth of their work. How do we effectively achieve financial inclusion without addressing access to equitable markets for the farmers and where the people are mostly employed? I would think that as we look forward to the next phase, that there would be a more integrated approach that encompasses access to affordable finance, access to equitable markets, and then enhanced production. It would be nice, for example, if we were able to see in the capability survey that the average income for the farmer, annual income for the farmer is, say, 800,000. The funding gap is this. Many CEOs here would actually, next week, come up with interventions to fill that gap. And I hope that that can be an input in the structural formation as we look forward to the next strategy. Thank you.
Thank you very much. I'll request that if we have any more questions, avoid giving your question a huge foundation. Give it a basic foundation so that us who are capturing it do not fail to really pick it. Yes, please.
Thank you very much, and it's really good to be part of this session. I just want to appreciate the Bank of Uganda for the amazing work they are doing on financial inclusion. As the World Food Programme, we have reached over 300,000 refugees in the 13 settlements in Uganda. And this is really commendable, and we have been working very closely with UNCDF, PHB, ULAN, and Bank of Uganda to ensure that financial literacy is mainstreamed for the forcibly displaced persons. I just want to appreciate the digital literacy that is the tools that are coming up, as mentioned by UNCDF. It is very key and important that we harmonize these tools. And just to contribute to this discussion, ULAN and the Cash Working Group, led by the World Food Programme, has come up with learning briefs on financial literacy training and also digital literacy trainings. These tools can be availed to anyone who is interested in this forum, but just to say that the refugees are also represented in these discussions today. Thank you.
Thank you very much, World for Program, for the initiatives. I'll take one more hand if there's any. Yes, please. There's a lady in the corner, and that will be our final hand. We'll pick more questions at a later point. Please allow us.
Thank you. This is Alizik, Director Economic Statistics, Uganda Bureau of Statistics. And as I speak, I see we are now talking about surveys that are being done. And I believe that we are looking at how to improve. And if you talk about financial inclusion, I'm looking at how we can access this information to be put in a central place, whereby we can use it to simulate it with other data sets that we already have at the Uganda Bureau of Statistics. I'm giving this because currently now we are talking about the parish development model, where we are going to have information right from the parish household. So how do we come in to help this information, simulate it, and try to improve the financial inclusion of households basing from what has been collected and going forward, so that we can also use this other information from the other side to see how we are progressing. Thank you.
Thank you very much. Our panelists, I'm sure that wherever you are, there are microphones and you can be able to respond. I know that, yes, please. Please go right ahead.
Thank you, moderator. I will comment. First of all, we thank the director from UBOS for the comment. I think we are happy as a central bank. We're happy to collaborate in terms of creating a unified data source. Currently, most of the financial inclusion data is housed on the Bank of Uganda website, but also the Simplify Money website. But we are happy, to enhance the data sharing initiatives, and we look forward to that. Our teams will get in touch. The other question I wanted to comment on is from Mr. I think it's Vincent from FutureLink. I think, Vincent, we take your comment. It's on the one hand, it's advisory in nature, and I agree with you that it's important to support, the rural communities, the farmers, with access to markets and other social interventions. Indeed, in his speech earlier this morning, the PS hinted on some of the ongoing government efforts to improve the social well-being and uplifting of economic welfare for the rural communities. So I will not go so much into that detail, but allow me to mention that from the financial capability survey, one of the most interesting findings was that the rural communities are actually better off in terms of general financial behavior. A comparison of the results between urban and rural communities indicated that the financial behavior from the rural communities where the farmers are based is actually much more better than their urban counterparts. Okay, and that was an interesting finding. So my point is that irrespective of the perceived low level of income, we see the rural communities, developing very good financial attitudes, and that is, I thought, something that we need to highlight. The financial behavior for the urban, dwellers was very poor. They live in the moment, and don't want to save, even when they have higher incomes than what their rural counterparts are getting. In fact, the findings also showed that the rural counterparts were better at saving. So I think much as the farmers may have challenges in terms of access to markets, much as some of the incomes in the rural communities may be low, this is not necessarily a barrier, as evidenced by some of the findings. Thank you.
Thank you very much. Yes, Richard.
Yeah, I think, Andrew, one of the things that Vincent raises, which is so important, is the issue of cost. We've seen it at the NSSF. One of the products we have is, we call it a diaspora product. Basically, it's available for people who used to contribute to NSSF and have migrated abroad and would still want to contribute. The only alternative for them is to use their Visa card or their MasterCard or whatever payment card they've got to be able to pay through the system and credit their account here in Uganda. The challenge has been the cost. We know that on the voluntary side as well, including mobile money, the cost of transaction, the cost of the transaction via the value of the transaction tends to undermine the small saver especially. So I think one of the things we need to do in terms of policy is to find out whether we can get the providers of these digital services, of these payment solutions, to be able to bring down the cost through, of course, things like economies of scale and whatever else you can do. But I think that's something that you guys in policy really can address, because it is a killer for the practitioners, and definitely the advantages we are getting out of the financial inclusion might be lost because of the cost of the transaction.
Thank you very much, and I like the insights that we're picking from this discussion in terms of cost, because as much as you're included into the system to be able to operate or enjoy financial services, what's the cost? And that's why we're talking about financial inclusion, to make sure that everyone in their respective designations or income levels are able to be included. So I'm sure that the Secretariat is picking many of these insights to see how we can marry this and move forward. And I think the discussion is how do all institutions then work together to make sure that we are speaking the same volume to deliver in financial literacy and financial inclusion. By the time we started the strategy, statistics told us that about 15% of the community of the population in this country was excluded, and now as we get into the tail end of the strategy, we then want to measure how far in terms of success have we achieved in reducing the population that is excluded in the market. And of course, I like the statistic when you talk about the rural community and they are able to probably save more compared to the ones in the urban. Of course, now me, from my average thought, I was telling myself that those in the rural really don't have Adenkule Gold, they don't have winning Waji shows, so maybe they don't have where to spend. But of course, that is now in a layman perspective. At this point in time, ladies and gentlemen, allow me, because we are pressed on time, to get into our session 3. We're investigating now key aspects or key segment groups that we focused on in financial literacy, that is women and youth, and we're speaking about promoting women and youth financial inclusion. Allow me invite our moderator, Miss Joyce Okello, the Mrs. Joyce Okello, the Executive Director, Bank of Uganda. Can we give her a round of applause as she's making her way here? Of course, for certain people, I don't want to overemphasize Mrs. In certain positions, you have to certainly be a Mrs. Allow me also mention that our panelists, we have Miss Edith Tusubira, the Executive Director, Uganda Microfinance Regulatory Authority. We have, thank you for giving them applause as they're making their way. We have Mr. Edton Babu, Program Manager, Livelihood Care International Uganda. We have Mr. Pasi Rubega, the Head of Business Development, Finance Trust Bank. And then we have Mr. Patrick Oketa, the Executive Director, Financial Sector, Deepening Uganda. Let's appreciate this team with a round of applause. And on that note, Mrs. Joyce Okello, I request you to take over the discussion.
Good afternoon, everyone. I'm Joyce Okello. I'll be moderating session 3, which is about promoting women and youth financial inclusion. Standing on this platform brings back memories. On the 26th of October 2017, and possibly around this time, was when the National Financial Inclusion Strategy 2017-2022 was launched by our late governor, Professor Emmanuel Tumusime Mutebile, with other stakeholders. And that strategy was specifically crafted to focus on women, youth, and the rural population. The late governor was very passionate about financial inclusion and will forever cherish his contribution in promoting the financial inclusion agenda. May his soul rest in peace. So, going back to our session, which is about women financial inclusion, I first of all welcome the panelists. Thank you very much for making time to discuss women financial inclusion. We have with us Mrs. Edith Tusubira, Executive Director, Uganda Microfinance Regulatory Authority. You're most welcome. We also have Patrick Okera, Executive Director, Financial Sector Deepening. With us is also Edton Babu Njavahika, Program Manager, Livelihood Care International Uganda. And last but not least, we have Percy Lubega, Head of Business Development, Finance Trust Bank, Uganda. I will start off with Edith. It is not gender bias, but I'll start with Edith. Edith, there is always a saying that when a policy targets everybody, then it is for men, it's not for women. And that means that if a policy is to benefit women, then it has to be purposely crafted for the women, and of course, in this case, the youth as well. Now, as a regulator, what are the main policy frameworks or initiatives in place to promote women and youth financial inclusion?
Thank you so much for the opportunity to be here. I'd like to start by, in the first place, appreciating the National Inclusion Financial Strategy, which has been led by Bank of Uganda. I think it has delivered results, although we still have a long way to go. You asked about women and the youth and how UMRA is trying to target them. First and foremost, Uganda Microfinance Regulatory Authority is implementing a law to regulate, license, and supervise the microfinance sector. As you all know, the microfinance sector is basically, I think the major players are women and youth. And those women and youth can only be targeted through specific mechanisms. The first and foremost, what we are doing is to implement a market conduct supervision a strategy whereby in that market supervision strategy we protect the public from unfair market practices. As you know, the history of microfinance, there's been a lot of failure to a good extent brought about by failing to implement right practices in that sector. So what we did as microfinance, we started from implementing what we call complaints handling mechanisms. And here we target complaints directly to UMRA, whereby people come in and say, this is the problem and how do we sort it out? So on-site and
off-site supervision is going on, if you can say, 24/7. We are also targeting ensuring that gender is intentional with us. Right now, as you continue hearing, very soon we shall be launching the self-help group guidelines, and these ones have been supported by several organizations. For example, like CARE has supported us on that very well, and the guidelines are almost in the final stages. Self-help groups or VISLAs are majorly, the major players in there are women and youth. And so if you go directly onto that, you can see that we shall be able to achieve if we put our focus on those guidelines and be able to deliver value there. We also have implemented consumer protection guidelines. These ones, the major objective is to create confidence in the market. We are also trying to ensure equitable practices in the financial services, whereby standards are being developed there, and we try to emphasize protection of the consumer in this process. And I think in the microfinance sector, that was such a missing link. So now we are fast-tracking that one. We also aim at providing efficient and effective mechanisms through the complaints handling mechanisms that we are trying to implement at UMRA. Because of lack of time, I would have loved to continue from there, but in summary, the platforms that we are trying to create through the complaints handling are helping people to very quickly come up to complain at UMRA, and then we handle immediately. And so the market is now so much aware that you can no longer cheat a woman or a youth, or maybe because they don't have information. Information is being circulated right now, and I think I'll add on to that afterwards.
Thank you very much, Edith. Taking it on from there, I'm still with you. The Parish Development Model, which was launched recently, focuses on youth and women. It stands out as one of those interventions really to support youth and women. And in the morning, the PSST highlighted that this intervention will help link the informal sector to the formal sector. Your quick reflections on how this intervention is going to benefit the women and youth.
Thank you so much, Madam Moderator. First of all, I would like to take the opportunity to thank the government for thinking about such a strategy. PDM is needed. And since UMRA is in place for the sector, the Tier 4 sector, I think we should look forward to how we are going to implement it. A lot of initiatives have been brought to the fore historically in this country, and some of them have not been very successful. We are so hopeful on PDM because there is currently regulation in place, and the SACCO regulations are in place. We think, and we are so sure that if we followed up as a regulator on the PDM, we shall get it right. I've already talked about the self-help group guidelines that are coming. All those are some of the initiatives that we are going to use as a sector regulator to be able to be in touch with that woman and youth who is out there, who's going to participate in the parish development model. I would like therefore to very quickly mention here that if anyone has been thinking that this time PDM is going to be free and so people just come and tap into the money and walk away, this time there is a regulator and we are going to be serious at it. By implication, we shall be able to keep savings very safe. We shall be able to ensure that the management at the parish is improved and solid. We shall ensure that the SACCO groups are sustainable, that the membership and interests are well protected. As you all heard, in the presentations earlier, we were told that Umrah has been facilitated to a good extent to be able to do that. Much as we look forward to additional facilitation, we want to appreciate that that has been done, and it will enable us to be able to deliver on the PDM. We look forward.
Thank you very much, Edith. Now to you, Edton. CARE International Uganda has been running a program on improvement of livelihoods so that everyone has a right to access and control economic resources. This initiative is considered key in driving the financial inclusion agenda. Could you please elaborate on the main interventions in this area and how it has performed, especially for the women and youth?
Yeah, thank you very much, Madam Moderator. And before I move further, I must say that money in the hands of a financially illiterate person is a bomb waiting to explode, regardless of the level of education. And for us, therefore, at CARE, financial literacy is an integral part of whatever we do. At CARE International, we believe that a world without poverty is possible, but we also strongly believe that it is possible if everyone has a right to control economic resources at their disposal. The right to control economic resources must be coupled with the right to make a decision about the finances. Madam Moderator, we know, not in this room, but I've encountered very strong personalities, male or female, whose ATM cards are controlled by the other spouse. So every month, when the salary comes, the other spouse has the ATM and determines how much money the other person can access. So we believe that people must control their resources. And so at CARE, our livelihood interventions layer on a key platform that we call Village Saving and Loan Association model, where globally over 14 million people, 70% of whom are women, have been able to participate. And specifically in Uganda, over 1 million people have participated through the Village Savings and Loan Associations. Through these associations, we are able not only to tackle the savings bit, but also to look at income in terms of business, skills. We also look at food security, because we believe a hungry person cannot save. So we tackle food security and nutrition, but we also invest in women economic empowerment. Like I said earlier, particularly at CARE, we tackle social norms that inhibit one gender, particularly women, from accessing vital resources, such as land, such as control their own resources. And so we work towards addressing those social norms. We believe in joint discussions at household level. Earlier on, a question was posed, how many of us discuss our finances with our spouses? And I was lucky to be counted among the few, courtesy of my financial literacy sessions. But you can see that our finances are not married. We get married, we make vows, but our finances refuse to get married. And sometimes that's where problems begin, because then domestic violence starts from there. Of late, I saw a clip where a spouse went to rent for their household an apartment that was owned by their wife and didn't know. And then they said, now the negotiations are over with the broker, go and meet the landlady in the office. So the landlady happened to be his wife, and domestic violence started. Women have a right to own property. Men have a right to own property. Can we discuss? Can we agree? And so at CARE, we discuss gender norms. But also, Madam Moderator, we have moved to a second level generation of VSLAs. The VSLAs of a metallic box where people put money and share on Christmas. And it's not unusual to hear that the prodigal son of the chairman has run away with the box. So we have tried to do digital to move the saving box online so that our women have bank accounts, our women have money on their phone so that they are able to move. And finally, we have done this to a systems level. So CARE is currently working with government, particularly Ministry of Finance, to put in place an enabling environment through a savings group policy framework. And like you've heard, we have also worked with Uganda Microfinance Regulatory Authority to have self-help group guidelines in place. Because we believe that for us to have true women economic empowerment, we must bring into fore the savings at grassroots level, majority of whom are women. And so our livelihood approach is integral in nature and believes that a productive conversation with the household members is able to lead to enhanced incomes, as you'll hear in one of the researches we've done. Thank you so much.
Thank you very much, Edton. And now to you, Percy. Finance Trust Bank is known as the bank that puts women first. And it has a very unique mission, one of its kind. It's probably one of those few mission statements that I've seen that mentions the word woman. If I can read that mission statement verbatim, to efficiently deliver innovative financial solutions to our customers and stakeholders, especially women. Now, Percy, as an institution, how do you live to that mission?
Thank you very much. I'll possibly ask Legacy to play us a short video that we have before I tell you what we do. Okay, so that video, coupled with the two stories I'm going to tell you, will tell you a lot about Finance Trust Bank in short. You see, one of the founding members told me a story on how Finance Trust Bank was conceived. She was a very well-to-do woman. She had actually been appointed on one of the boards of a biggest financial institution then. And in her first board meeting, she was asked to open up a bank account. So she went down to the banking hall to open up the account, and they asked her, please, can you share details of your husband? We want to be sure that he's okay with you opening a bank account. And she thought, look, she was well-to-do lady, she has been appointed to the board, and she needed to seek consent from the husband to open a bank account. And of course, the rest is a story of her teaming together with other women and said, this is impossible. If for us that are well-to-do can be asked to have reference to our husbands to open an account, what about the women in the villages? It is worse. So that's how the bank was conceived. So to Finance Trust Bank, the foundation of the bank is not just a strategy to tap into women. It's personal. We do it as part of the corporate DNA that gave birth to this bank. Of course, we have a lot of women in the bank, but to some of us, you notice we are men, a couple of men here from Finance Trust Bank. We notice the task is so hard for women in respect to financial inclusion and economic and social empowerment. We could not entrust it to women alone, so that's why some of us are here. Then, the other story that I would like to tell you is about some of these workshops that you have seen us do for financial literacy. In one of them, we have a session where we ask ladies, can you please share some of the things that a woman needs to do to get empowered economically, socially, to enrich themselves. And specifically in one of the sessions in the East, a lady put up her hand and said, the women in this place need to stop giving birth to so many children as a status symbol. And of course everyone applauded her and laughed, and it was very interesting. Only for us to ask, and actually women were saying, yes, in that particular part of the country, when a woman gets married, she needs to prove that she's a woman by giving birth to so many children. And as one of the ladies said, when you're a mother and you give birth to children, the children then become your future. So if they are okay, you're okay. And another lady was talking about things like she has a shop in town, in Mbale particularly, and when the whole family knew, her clansmen, that she had set up a shop, it became a coordination point. And for that matter, whoever was going through Mbale would stop there, get transport to the next destination. The reason I'm bringing these stories plus the video you have seen is that Finance Trust Bank was set out to deal with some of the things. These things that you have heard, some of them are social norms and beliefs that are in society, but somehow they influence the day-to-day decisions that people make on financial inclusion, on whether they should keep money in a bank. Their roles in a family as a mother or as a woman, and her making a choice to actually go and take a small loan to improve her business. And if you're a financial institution, for us in Finance Trust Bank, we try to make sure such women, when they show up, they're given priority because they don't have so much time like men. I'm a man and sometimes I have to leave home even without an agenda, but to a woman, leaving home must be purposeful and it better be short. So when we're dealing with women in the day-to-day circles and in a bank, we give them priority when they show up because we know they have a lot more responsibilities in a home than actually men. I remember during COVID, I phoned a colleague of mine and I told him, hey, where are you going? And he's a guy. He said, no, I'm just leaving home and taking a walk. I don't know where I'm actually going, but I can't stay home. I'm not used to that. But the women were possibly more comfortable doing that. So as Finance Trust Bank, we're trying to tailor-make our services to suit women. We're trying to create specific products that are more than just the traditional banking. When a woman gives birth in Finance Trust Bank, she's entitled to a certain package to help her pay her hospital bills, for example. And that the women know. We're trying to fight the battle of alternative channels. And we have our manager alternative channels here, Mr. Sechito, right there. And our journey is to to try and make sure the woman does not spend so much time away from her business and her family. And that helps us create an edge. Is this a war we have won? No, we haven't even gotten halfway. There's still a lot of work to do in helping our women and position ourselves into their minds. But we know that banking alone, in respect to keeping money for self-custody and a few loans here and there, will not actually cut it for us. Of course, staff engagement. We have women staff and men staff, and they all have to be in sync with knowing the purpose for which this bank was established, to empower women economically. Then we also have a lot of stereotypes that we deal with on a day-to-day basis, some of which are to do with women are so comfortable when it comes to the little they have. And so you see that there's a lot of stagnation. Some of the statistics that we will not show you is that, yes, we're having a lot of more women coming to the formal banking sector, but when you look at the savings and the net savings and the actual credit they take out from banks, these are really small tickets that we want to improve. And yet we know, all of us, that access to credit is an enabler. But it's so more to the side of men than it is to women, especially in terms of the ticket. So a lot of things are being done in the bank, but through financial literacy, you can deal with the stereotypes. You can deal with the cultural limitations that are in there in product development, like access to collateral, form of security. We have platforms that allow women to access, and even men access, loans on their mobile phone. I think we're the first bank that did this, to allow women at least access up to £1 million on a mobile phone. These things are part of the things we are doing, and we keep innovating around the service for women. Thank you.
Thank you very much. Patrick, allow me to call you Okera, so that those who keep calling you Oketa get to know how the name is pronounced. It's Okera. Financial sector deepening Uganda is proactively involved in mainstreaming gender in its operations, and there are a number of projects you have undertaken to promote digitized financial services among the youth and women. Could you briefly share with us your achievements and future plans towards strengthening women and youth financial inclusion?
Thank you very much, moderator. Financial sector deepening is one of the key partners in this space to enable our folk down there to become financially not only astute, but use finance as a way of improving their livelihoods. Now, our key mandate is to enhance the achievement of universal financial inclusion, and this we do with our folks down, smallholder farmers, the women, the small and medium enterprises, the youth, and also the disadvantaged refugees that we have. I think for us, financial sector deepening, we are driven by the requirement within mankind to share. I'll tell you a story about an old man who used to win competitions because he had the best maize grain in his courtyard. And that old man used to share his seeds with everybody in the village to be able to achieve some form of sustainability within the village. But he ends up being the best. So, one journalist asked him, why do you share your maize with everybody and yet you're competing with them? What he told them was that when the wind blows the pollen grains, if I do not share my seed with the village, their low quality seeds will adulterate my high quality seeds, and therefore I will not be able to achieve the quality of seeds or maize that I proudly get awards from every year. So for us, within financial sector deepening, we recognize that the prosperity of what we call the few must be shared across, even with the folks that are in the rural. Out of context, I think initially it was highlighted that 66% of Ugandans are now included. That is 2021 Global Findex data. But in 2009, we were merely 28% of us included. So a lot of work has been done in this space. For context, only 22% of Ugandans live in the rural area, in the urban areas. That means 78% of us live in the rural areas. And the recent budget indicators indicated that 70% of we Ugandans are still surviving on agriculture. And out of that, the data within the country shows that 2/3 of those are youth, and 76% over the last 7 years have consistently been women. So we at Financial Sector Deepening recognize that to be able to move the needle in enhancing financial inclusion, that demographic cannot be ignored. And therefore, it's at the fore of what we do. Over the last 7 or so years that we have existed, we have emphasized partnership with both the private and the public sector to be able to improve the flow of financial knowledge and the building of the different financial strata and blocks to enhance financial inclusion. Now, moderator, you asked us what financial sector deepening has done over the years, and I'll highlight just a few of those. In the beginning, one of the key achievements of NFIS 1 was the shared agency banking platform. We were key to the development of the agency platform. We worked with the Uganda Bankers Association to be able to set up the agency bank company that now runs the agency banking platform. I think data was recently in the morning shared that we have over 22,000 agents out there. So that means that we now have more people involved in some form with the formal financial sector. And the most recent definition of financial inclusion, it talks about the opportunity to have access, but the ability to also be able to take advantage of the diverse range of financial products that are responsibly provided by formal financial institutions. So the informality is not in question, but how do we bring our folks to the formal sector? The second one that we have worked with and very closely with the central bank is the national switch. We conceptualized the idea of the national switch together with the central bank. We helped build the business model around it. We are working with them still to enhance the standards and the guidelines to enable the national switch to be in place. Right now, financial institutions exchange the flow of funds between them bilaterally because each of them has to build their own infrastructure, and that's very expensive. But if we get the national switch in place, that means that there's going to be a centralized switch managed by the central bank or an agency that the central bank will mandate to manage this, and the flow of resources within financial institutions will be much more swifter, and the overheads that financial institutions use to build infrastructure will subsequently reduce the cost of these transactions. So we see that as a potential route to reducing the cost of transactions and subsequently more financial inclusion. The eKYC platform is an area that we participated in the development. We also worked with the Uganda Bankers Association to build a platform to enable financial institutions seamlessly now have access to the national data on our identities. So the opening up of bank accounts has become very easy. My bank now says that I can go online and open a bank account. I don't have to walk to a branch because I can fill all my details within a platform. My name speaks to who I am and the details of me as a person, and therefore the platform and the KYC validation initiatives now are a lot more easier, and that means that we have better inclusion subsequently. We have also worked with the Ministry of Gender, Labor and Social Development to expand the work that they had piloted with the digital payment of social grants. We all know that the government of Uganda has been working around the scaling up of the social assistance grant for empowerment. Now, the pilot was around 15 districts. We've now helped escalate it to about 146 districts. We know that the donors are pushing back on this at the moment, but the government of Uganda has a promise to its people to improve the livelihoods, especially of the old folks who live in the rural areas. Financial sector deepening enhanced the pilot nationwide. We have also worked with Uganda Registration Services Bureau to be able to look deeper into how we could use alternative collateral. So the shuttle securities the Shuttle Securities Act of 2014 was reviewed with the help of financial sector deepening, and now we're able, as earlier on was mentioned in the morning, to use movable assets to be able to collateralize some of the loans that our folks are borrowing. So a lot has been done with the help of financial sector deepening over the last 7 years. We are in the process of working through our new strategic plan that will enable us to get deeper into areas that focus specifically with women and youth. Now, we are managing facilities right now with the help of MasterCard, who is one of our funders, focusing on COVID recovery. It's a $20 million facility that is working with financial intermediaries that focus 60% of their work at the bare minimum with women and at least 30% of their work with the youth. So we are enhancing our capability as financial sector deepening to be able to meet the NFIS goals and objectives. We have also done several studies. If you go into our website, you'll find we have done studies on gender mainstreaming. We have done work on disaggregation of gender data. We have done work on barriers that prevent specifically women from accessing financial services, among others. So the work that we have done is still continuing, and we will continue working very closely to enhance the livelihoods of our women, youth, and specifically refugees. Thank you.
Thank you very much, Patrick. As we wind up, I'm going to ask you one general question where you'll take 1 minute each for the interest of time. The question is, what should be the main policy focus for the next national financial inclusion strategy? Starting with you, Edton.
Yeah, thank you very much. Indeed, as CARE International, we believe that an enabling environment for women to be able to thrive is very critical, and therefore a focus on a strategy that is going to enhance a policy framework for savings groups is going to be very critical, as well as looking at the saving guidelines ecosystem and looking at the overall women economic empowerment strategy, I think is really very, very critical where we sit. Thank you.
Edith, 1 minute.
Thank you, moderator. And I just want to focus on the area of cyber technology. I've just been on a trip whereby our colleagues out there are emphasizing cyber, because I think when they fail the other side, they will come to us because we are quickly uptaking technology, but we don't yet have safeguards in place. So what I can say here is that we should try to look through in this strategy on how we are going to mitigate those risks.
Thank you. Percy?
Thank you. I think my parting shot would be that we need to have a much bigger, broader look at this financial literacy thing that we are talking about, not just as a corporate strategy or individuals in the different sectors, but we need to have a bigger strategic objective, a curriculum of sorts that we're all looking for, with objectives that can cut across all these things to enable financial inclusion, because there are a lot of things that we need to deal with that would fall then within that. So partnerships would be important with government, with all stakeholders, to make sure that we are pushing this thing, because as financial institutions, for example, we are not an education institution per se, but we need to know that the objectives are way bigger than all of us, and they would help make us have the next steps as a country. Thank you.
Thank you very much. And finally, Patrick, 1 minute.
Thank you. I think there's a lot from NFIS 1 that has not been completely achieved. So I think we need to continue with the agenda of NFIS 1. 2 is we need to see more gender disaggregated data, both by the regulated entities within the financial space, of course, and those that are regulated by UMRA. I think that's going to help us to be able to design financial products and services that target specific people. So if you don't have gender aggregated data, for example, or youth data, or data that is aggregated by certain social groups, I think it becomes very difficult to design products. So I think that's very important. And thirdly, I think the development of the national switch is fundamental, and that's going to be a really important agenda that has to be carried forward into NFIS 2. Thank you.
Thank you very much. We have come to the end of the session. I'd like to thank the panelists very much, and thank the audience too for listening. You are very attentive. I could see that from your faces. Thank you very much for sharing the initiatives that are out there to promote youth and women financial inclusion. Thank you.
Thank you very much, Mrs. Okello, and a big hand clap for our panelists for dissecting issues on women and youth financial inclusion, who are key category groups in our strategy. In the interest of time, we'd like to move to our final session, and this one is looking at improving access to finance for MSMEs, and would like to invite Mr. Ivan, head of the Africa Regional Office, Africa and Middle East at the Alliance for Financial Inclusion. Please, Ivan, come up here. And then I'd like to introduce the panelists, Ms. Stella K. Olimi, who's the head of charters at Uganda Registration Services Bureau, Mr. Richard Byarugaba, the other Richard Byarugaba, Executive Director Finance, Bank of Uganda, Mr. John Kakungulu Walugembe, who's the President, Federation of Small and Medium Enterprises. And lastly, would like to invite Mr. Goloba Kezekia, who's the Manager for the Financial Inclusion Pillar for the Parish Development Model. This is the latest government initiative to improve financial inclusion in Uganda. Ivan, the floor is yours.
Thank you. Good afternoon, ladies and gentlemen. My name is Ivan James Setimba. I head the Alliance for Financial Inclusion Office, based in Abidjan, but I'm a son of the soil, so it's great to be back. I realize that there are two competing issues. One is lunch, the second is that we have to wrap up. So I'll request the panelists to be as brief as possible. Not a very good thing, but let's try and work with the time that they've given to us. Now, this session looks at improving access to finance for micro, small, and medium enterprises. And when we talk about micro, small, and medium enterprises, we're looking at, as per UBOS definition, annual turnover of less than 10 million for micro, between 10 and 100 million for small, and between 100 million and 300 million for medium. And we're looking at 1 to 4 employees, 5 to 49, between 50 and 99. So the question, of course, is that why is it that 70% of micro, small and medium enterprises don't have access or have unmet credit needs, meaning that they don't have the credit they need to grow their business? And interestingly, a survey of 833 micro, small and medium enterprises in central, western and eastern regions in 2021 estimated that the credit by MSMEs in Uganda is approximately, and this, please listen, approximately $8.8 billion. That's the market we're looking at. So we have 70% unmet credit, and the demand $8.8 billion. So what is it? Why can't MSMEs access credit? And I hope that this panel will help us understand what are some of the challenges and what are some of the solutions that are available to increase access to credit for MSMEs. So that I thought I should just put out before I get to the panel. Thank you. So, and this is very deliberate. I'll put you on the spot, Stella, because you're the only lady on the panel. So I will start with you. Stella, there is a security interest in movable property registration system at the Uganda Registration Services Bureau, which was established under the Security Interest in Movable Property Act of 2019. And this law allows for the use of movable assets. So if I have a goat or if I have a fridge, I should be able to use that as collateral to be able to access credit. So very briefly, could you tell us what or how MSMEs have benefited in the use of movable assets to access credit?
Thank you, Ivan. I work with Uganda Registration Services Bureau. We offer a lot of services. We are a government entity, and one of them is the movable collateral registry. But before you go deep, of course, I need to briefly tell you about URSB and what we do most. We formalize our businesses. That means we register companies, we register businesses, we register partnership, we register documents. We do register intellectual property rights, that is the patent, trademarks, industrial design, and more others. We also have a civil registry that deals with marriages. And then we have the insolvency directorate that deals with bankruptcy, rescuing of distressed companies, and where things don't come right and they need to exit the market, we enable them legally to exit the market. And the new baby on the block, that is the registry, the collateral movable registry. This registry came in place in 2019. It was established by the law, Security Interest in Movable Property Registry Act that came in place. And when it introduced this particular system, it was rolled out to the general public. What does it do? We do not register the assets. We register the interest in the particular assets that have been pledged to access credit. The main goal here was to facilitate the women, the youth, and SMEs who do not have land as collateral to get credit from financial institutions, but have other valuable assets. For example, when I talk about the women, we do a lot of small businesses. We could be having stock. We do agriculture a lot, and then farm harvest. We have motor vehicles, intellectual property. It is an intangible asset, but it is a movable asset. Then we look at household items, whereby people pledge their items to access credit. In Uganda, you all know if you do not have land, it is very complicated to get credit from regulated financial institutions. So that is why we have this movable collateral to enable the financial institution access information about the movable assets that have been pledged and to give them confidence to lend against these movable assets. Interestingly, the registry now has 2 years in place, 2.5, and we have around 13,800 transactions pledged or registered by secured creditors, what I would call lenders. Now, our system or our registry is all digital, all online. So registrations are done by the lending institutions. We have microfinance institutions that embrace the registry, and they are using it very well. 70% of the transactions come from microfinance and money lenders, the regulated ones by UMRA. And 30 and the like come from non-financial institutions and institutions regulated by the central bank. This registry, the data in the registry can be accessed by carrying out a search, and we have quite a number. Lenders have embraced it and have gotten data regarding that. On the registry, we have women, around 3,400, who have accessed credit using their movable assets. Like I said, the microfinance institutions embrace the registry and do lend against movable property. We even have motorcycles. We have motorcycles on the registry. We have bicycles. There are lenders who have extended credit and accepted bicycles. Of course, motor vehicles are the most accepted and appreciated collateral by the lenders in the market. Actually, we have around, the total of collateral registered is 18,000. So that is how the registry is and how it has enabled women. For the women, we also have around 3,500 who have accessed loan through this registry. Thank you.
Yeah, thank you very much, Stella, for highlighting what the registry is about and what's doing. And maybe in 1 or 2 sentences, we see that certainly 2 years is not a very long time, but what are some of the challenges that you faced, starting up the registry and having it operational?
Thank you, Ivan. When we rolled out this registry to the general public, financial institutions supervised by central bank have never appreciated it up to now. So they rarely lend against movable assets. And surely, to be very frank, it's only banks that can lend a substantial amount of money and for a longer period. So if the regulated financial institutions are shying away from the collateral, it still brings a challenge. So the main point is the financial institutions have to embrace this registry so that they can be able to extend, because it will provide all the information that they need. Secondly, of course, this registry is all digital, all online. When we rolled it out, where hard-to-reach area where there is no internet, it became a little bit of a challenge, because when you don't have internet, you cannot access the data. Short of that, of course, COVID interrupted. We are still sensitizing, and we'll continue sensitizing the general public to appreciate the collateral registry. Thank you.
Thank you very much, Stella. And about the financial institutions, in Luganda we say, oyogeredde ku police. So I hope the colleagues from the Bank of Uganda do take this up with the institutions. Moving on to Richard, we've had a lot about the agricultural credit facility. If you could briefly tell us about the agricultural credit facility and the business recovery fund that the bank is currently running.
Thank you, Ivan. We could talk a lot about this, but given the limited time we have, I'll try to be brief. So in about 2009, the government set up this agricultural credit facility after realizing that formal financial institutions were not lending to agriculture. They considered it to be very risky, and as you know, it depends on weather. So there was very little money going there, and as you have heard, we have a big population that depends on this, and when there is no man at home, the men disappear to towns, they leave the youth and women. So we lend to agriculture, and why do we bring agriculture to this workshop? Because this money empowers the women and the youth, and also brings people into the financial sector, because you cannot access loans if you are not, you don't have an account in that institution. Now, in about 2018, we realized that this money going to agriculture, because we lend to everyone along the agricultural value chain on the farm. People who are doing grain, the aggregators, those who are buying cows, everything to do with agriculture. So 2018, we saw that the smaller ones were not coming. So we introduced a product which we called block allocation, where a group of people come together, approach a financial institution, or the financial institution will get files and aggregate them, and these borrowers can borrow up to 20 million shillings, but the total for the file is about 1.5 billion. But they don't need to have the formal collateral that banks want, land titles, so they can use chattel mortgages. And I'm happy URSB has started registering this. We are going to work with the banks to make sure that this happens, because now they are using unregistered chattels. So with registration, we are going to take it up. So these include also Chibanja. You have the agreement, you go to the bank and you will be accessing this money. And these smaller people have now over 1,000, we have lent about 7 billion. And they take money for various things, seeds, pesticides, anything, the smaller ones. We have lent even up to 200,000. So we think we are going to include more people, because some of those people actually didn't have accounts, but with this facility, they are able to go to the bank. And also I've seen them, the PSPs are also benefiting in this, because the banks send the money, I think, through the phones. I've seen Easy Money and all these on the statements. So Ivan, then we had, to support agriculture, we had a bump harvest some time ago of maize, and the price was moving from 500 to 200 shillings. So the ministry put in place another facility which we call the grain facility, to give money to these aggregators. Some of them, I think you know them, are Ponya and others, those who buy grain and store. So they supported the price because we gave them money to go and buy and store, because they have good storage facilities, and we think that this also helps. Now, when we are giving money to agriculture, we may not give everyone, but we have people who are employed in agriculture. We have they are what we call off-takers. People, for example, will have 2 cows and they sell milk to Jessa. Then others will have a small plantation of sugar cane and they sell to Kakira. So when we give money to Kakira or Jessa, we are spreading the money to everybody else. And we are encouraging them to use digital means of payments. It is not wise to carry money these days. Now, to leave that, you also asked me to talk about the Small Business Recovery Fund. In 2021, the government wanted to help people who had been affected by COVID-19. This is really for COVID-19 affected businesses that are not agriculture. So we are talking of saloons, we are talking of small shops, we are talking of people involved in transport, hospitality, those small ones. And the definition, as you said, is for SMEs, 5 to 49 people with a turnover of 10 to 100, and we lend up to 100 million. We lend at 10% this money. And we have not seen a big uptake. I think you'll ask that, but since we don't have time, I can say it. People are not coming for the money. We have 100 billion, and from that time we have lent barely 5 billion. So we are yet to find out why they are not coming. But as we say, many people don't have what is required. They are so informal, they don't have records, they don't have bank accounts, so they keep all the money in the house or in the safe, in the drawer, in the business, and when the banks ask that bring some documents, they don't have, so they run away. And what I should have said is that all these 2 schemes, we partner with the bank, so it is a private partnership with those institutions that the Bank of Uganda licenses. So those who are in Umura, we are not dealing with them as of now, but there is also an opportunity we should be able to target them. So the banks, when the government brings 100 billion, the banks also bring a matching fund. So for commercial banks, they bring 50%, but credit institutions and MDIs, we still give them 70%, so they participate to the tune of 30%. And the agriculture credit facility is up to 12%, grain facility up to 15%, SBRF, as I said, 10%. And this is an opportunity with inflation and rates going up. We are not going to increase this, so Ugandans should come and take this opportunity to get cheap funding so that we can have food security and kickstart our economy after COVID-19. Thank you.
Thank you very much, Richard. I think for me, the big takeaway is that there's money in the bank, and for some reason, it's not being picked up. So hopefully, we will be able to have interventions that actually allow for these funds to be utilized. Now, moving on to John, and I think this is now a good time to bring in the customer perspective. So, John, the Federation of Small and Medium Enterprises was set up as a small body for small and medium enterprises in Uganda. Could you give us a highlight of some of the key wins and challenges you've registered to date? And of course, if you could do that very briefly.
Okay, thank you. The Federation of SMEs is a voice for micro, small and medium-sized businesses in Uganda. We seek to ensure that the policy environment is conducive for small business owners in Uganda. It's not as easy. I know that running a business in this country is hard work. Running it sustainably is a lot of hard work. So the Federation seeks to be that big brother that helps small business owners to navigate the intricacies of running a business. We do this through advocacy. We push for the Small Business Recovery Fund. I'm happy to talk to Richard here. I'm surprised that money is there and it's not being taken up. The SMEs are also saying they're not getting the money. You know, and as people who pushed for this, because we went to government and said our members had been affected by the pandemic, we are an interested party and we want to see that this money is taken up. We also help in the area of linkages, financial service providers and SMEs. There's a bit of information asymmetry sometimes, so we do that work a lot. We are also very active in the area of education. We do a lot of digital and financial literacy. We have so far supported over 20,000 SMEs through a digital literacy program that we run with UCC. We also offer advisory support to businesses in different areas, including issues around market access. So this is the kind of work that we do. And what I can say before I finish is that a lot of, because if you look at the panels, today's panels and so on, a lot of the discussion is very much supply driven. We are setting up applications, we are doing this. We don't take time to appreciate the mindset of the user, and I think that's why the Federation and other groups can come in to give you that perspective and to help you to design more appropriate products across the board, whether it's saving products or insurance or this. I think the need to look at both the supply and the demand side is very critical. Thank you.
Yes, thank you very much, John, and I think this speaks to
would like to welcome the Minister of Finance. Can we all stand up to welcome the Minister of Finance, Planning and Economic Development, Honorable Matia Kasaija. You're welcome. Honorable Minister, we are completing our last session for the panel discussion on SME financing.
Thank you very much, and a warm welcome to the Honorable Minister. And I think it's the timing can't be better, because we are going to hear from the Minister of Finance about this very wonderful model that has been developed. So, Bwana Golova, if you could take us through the parish development model that the government has put in place, and possibly highlight what it's going to do and how it's going to do it.
Okay, thank you very much, Ivan. Good afternoon, ladies and gentlemen. Yes, so first, what is the parish development model? What is PDM? Parish development model is the government's last mile strategy to try and bring services closer to the people. So the parish, that administrative unit called the parish, is now the epicenter for planning, budgeting, and service delivery. And the goal is to increase household incomes and improve the quality of life for all Ugandans. So we have been talking a lot about leaving no one behind since morning. So that's what we're basically trying to achieve. The focus under the PDM is to transform the subsistence households into the money economy. So UBOS has told us that these households that fit this description, around 3.5 million, or 39% of the households in Uganda, are subsistence, and we're trying to facilitate the transition of those households into the money economy. The target is that by the end of these 5 years, these beneficiary households should be earning at least 20 million shillings per annum per household. So we're working towards that. There is a slide up there that is flash. I hope everyone can see it. The PDM, the parish development model, all the interventions under this strategy are centered around 7 pillars. And those 7 pillars are what is flashing up there. So I mentioned that the goal is we're trying to increase household incomes and improve the quality of life, but we have 7 pillars. And the first pillar, which is the green one there, is on the agricultural value chain, if you like, agricultural development value chain. So under PDM, financial inclusion is not an end in itself. I want to say that again. Financial inclusion is not an end in itself. The financial inclusion under PDM is for supporting the production or the productive activities under the agricultural value chain. So if you talk of production, processing, marketing, value addition, storage, those are the eligible activities for which the funds that government is providing under PDM should go to. So the financial inclusion is for supporting activities in Pillar 1, which is the agricultural development value chain. So Pillar 2 is infrastructure and economic services, and that's where government will handle issues to do with community roads, access to the markets, energy to add value, water for production, and the digital infrastructure. So we've been talking about digital literacy and the digital platforms and digital technologies, but basically the digital infrastructure also will be handled under this pillar. And we want to address the challenges under some of those things so that the money makes sense, the money that government is providing for the agricultural development value chain. Pillar 2, that's Pillar 2. Pillar 3 is the financial inclusion, where government is providing the famous 100 million shillings to each and every parish. And I'll explain a bit more later on, but basically what government is doing is that it is establishing a parish revolving fund for purposes of providing these monies to the wananchi, the parishes. Pillar 4 is social services. A healthy and literate population makes things easier for us to achieve the outcomes we want to achieve. I think the morning the PS also mentioned things like education, and yes, financial inclusion are opportunity equalizers, so they are very important, and that's where those issues are managed. Pillar 5 is the community mobilization and mindset change pillar, but what is most important for us to note is that under PDM, what we are promoting for the beneficiary households, these subsistence households, and you can I think relate it to the micro enterprises, the informal ones that Mr. Ivan was talking about. We want to propagate or promote a business mindset within these households. That is what is transformative. So that's what we're trying to achieve under the pillar on mindset change. Pillar 6, I think you notice that Pillar 6 is right at the bottom, and it's there deliberately. It is the foundation for all of the other things that we are doing. That Pillar 6 is the pillar on the system. There is a parish development management information system that government is building, or government has built or designed, and currently there is data collection going on across the country. Data collection on what? Data collection on the households in Uganda. Basically, there is in brackets there KYC. The borrowers who will eventually benefit from the resources that government is providing to the parishes. Under this pillar, we are collecting information such as ages, sex, gender, what economic activities are they involved in. A lot of information around those households that tomorrow can be used in business decisions. Now, there's been a lot of excitement about the money, but I just want to invite you to think about what we are creating with this new system. These subsistence households, these informal micro enterprises, micro, and I use that deliberately, have been largely not benefiting from the formal financial system that is in place. And by formal financial system, what I mean is the development banks, development financial institutions, and the equity providers. So if you say East Africa Development Bank, Uganda Development Bank, those largely serve the large corporations and big companies, not the wananchi we are interested in PDM. If you move downwards and go to the banks, they are also largely serving those large corporations, and then they start moving down to the medium-sized enterprises and small enterprises. For example, so under the Small Business Recovery Fund, we are explicitly targeting small businesses with these banks. Now, we are still not reaching the subsistence household or the informal micro-enterprise that we want to reach under PDM. The microfinance institutions, you now start seeing some reach to the subsistence households that we're interested in under PDM. So why is this? There's, in the presentations that have come before this, there's a lot of, I don't know if you noticed, but there was a lot of things that were mentioned that are constraining access that we're trying to address under PDM. So number one is information asymmetry. The providers of this financing in the formal financial system, when you talk of this subsistence household, when you talk of this informal enterprise, it's invisible to that provider. And because it's invisible, they don't want to touch it. Now, we have the movable charters registry. There's one other problem, lack of collateral. But even with the movable charters, Ms. Olimi has just mentioned to you that there's a lot of preference for things like motor vehicles. So we still have a challenge there. The third one is the cost of the funds, the interest rate. Now, with PDM, and particularly with this system that I was talking about, one important thing to note is that we are creating a digital identity for these beneficiary households, these subsistence households, these informal enterprises. Because for them to participate, data is being collected on them, but as they transact, and this system has been designed to track the daily transactions at the parishes in these circles that we're creating. As they transact, they create a credit history that they didn't have before. So all of a sudden, they are visible. And with that credit history, with that digital identity, they can actually access more than what we are providing under the PDM. So tomorrow, they can use that information or that credit history, that digital identity, to actually access much bigger financing outside PDM. So I want to invite you to take note of that, but basically that's what we're trying to achieve with PDM. Maybe to wrap up, I know the time is that what government is doing, I mentioned, we're creating the parish revolving fund, and how we're doing that is that for each of the 10,594 parishes in Uganda, government is establishing what we're calling a PDM circle, one per parish. That PDM circle is registered under the Cooperative Societies Act, so it's a legal entity and will be licensed subsequently. That PDM circle is a center for integrated service delivery at the parish. So it will provide functions to do with the production, marketing, the financial services that I mentioned. The government is providing this money for lending to those agricultural product activities, and then technical assistance. So in terms of financial literacy, if you talk about preparing, or at least our beneficiaries under PDM, government is emphasizing preparing those beneficiaries through provision of business development services and financial literacy. So the last pillar, which was 7, governance and administration, is where we have issues to do with the government infrastructure, the local government and the central government. So government will leverage that infrastructure to provide these business development services and financial literacy up to the parish level. But in addition to that, government is also partnering with the private sector to provide financial literacy and digital financial literacy to the parish, to the leaders and the members of these PDM circles that will have been established at each and every parish. So the banks that are participating under PDM, they have been required, it's mandatory, they have to provide these services to the beneficiaries or the leaders and members in the circles that have been created at the parishes. So one last one, Ivan, is that in terms of because I think in today's discussion, we prioritized women and youth. So Cabinet made the decision that of the 100 million shillings that it is providing to each and every parish, 30% of that money should go to women-led enterprises. 30%. 30% still of the 100 million should go to exclusively youth-led, and projects, youth-led enterprises. 10% should go to people with disabilities. And then 10% should go to the elderly. And then finally 20% will go to the others. So the others is the middle-aged men, child-headed households and the like. So that is a decision that was an affirmative action that was taken by Cabinet to reach out to this vulnerable population. So thank you very much, Ivan.
Thank you, Goloba, for that insightful discussion on the PDM. We need to bring this to a close, so thank you very much. But I think before we close, just two takeaways from the panel discussion. I think what has been highlighted as one of the biggest challenges to access to finance for micro, small and medium enterprises is the informality. I think if we can come up with interventions that address informality, we will go a long way in dealing with this issue. I think the other key issue that comes out is data. I think data is the new oil, and if we can leverage on data technology and innovation, then we stand to increase access to micro, small and medium enterprises. I want to thank the panelists for their insightful discussions, and also thank the audience. Unfortunately, we're not able to take questions at this time, but I think there are other channels that the questions can be put forward. Thank you very much.
Ladies and gentlemen, can we give the team that just left the stage a big, big round of applause? We've come to the beginning of the end of the annual Financial Literacy and Financial Inclusion Forum. And once again, ladies and gentlemen, let's make welcome for Honorable Matia Kasaija. Honorable, it feels good to be mentioning your name when you are seeing me and I'm also seeing you, because on many occasions I was seeing you on TV and wondering if we'll interact and I speak your name while you're seeing me. But today the Lord has really presented this day, and as the saying goes, it is my day to shine. Leaving that aside, ladies and gentlemen, we have lunch. Coupons have been served, and so immediately after the semantics that we're going to talk about, we should be able to have our meal. We have had an aggressive and interesting online session that has had participants straight to about 200 to 250 participants, and I think we need to give them a big round of applause because they've been participating intensely. We've agreed because of time we will not have Q&A here at a physical level, but for our online audience we are going to share responses online, so kindly stick online. Unfortunately, one of the things we are not going to do is to share with you lunch. The people on Zoom and YouTube, we want to presume that where you are, you can be able to find lunch, and may the Lord serve you in that direction. Right now, ladies and gentlemen, without any further ado, as protocol permits, before I invite the Deputy Governor, Bank of Uganda, who will invite the Minister, allow me appreciate or remind you that this, in terms of the strategy,
It's important to appreciate that today we've been handling two strategies, one on financial inclusion and the other on financial literacy. The strategy on financial literacy started 2019, ending 2024, so it's still ongoing. It still has a couple of years. But that on financial inclusion that started in 2017, ending 2022 September, has almost come to the end. But there's a team that has put this together, this inaugural forum. So it's important that we recognize them. So Alex and your team, please rise up so that we can be able to appreciate the team that puts this together. There are only 3 people, but at the back end there are so many people. We've decided to make sure that this is purely digital, and I noticed that when we were seated with Alex there and a few colleagues from Bank of Uganda, many people kept asking that, oh, the minister has just come in when we're finalizing, who's going to give him a recap? And I told them that having interacted closely with the ministers, the people that move closely with the minister, Honorable Matia Kasaija, the minister is tech savvy and he's been streaming live on YouTube. I think we need to give him a big round of applause. He's ably informed of every taking that we've had. Of course, I'm sure that the only thing he missed was the tea, but I'm sure, Minister, you will enjoy with us the lunch. At this point in time, ladies and gentlemen, without any further ado, allow me to invite the Deputy Governor, Bank of Uganda, who will then come and invite our Minister.
Our chief guest, the Honorable Minister of Finance, Planning and Economic Development. The Permanent Secretary is here present. Our key note speaker earlier this morning, the AD of the Alliance for Financial Inclusion, the heads of government departments and agencies, chief executive officers of financial institutions, private sector institutions, fintechs, civil societies, and the development partners here present, distinguished invited guests, members of the press, ladies and gentlemen, a very good afternoon to you all. Again, let me start once again by thanking each one of you for honoring our invitation to this inaugural annual forum on financial inclusion and financial literacy, and for being able to stay through this event, either physically or virtually, at least up to now. Let me also thank the moderators, the panelists, and all other participants for the discussions and submissions made during their respective sessions. I have been reliably informed that the level and the standards of interaction was commendable and highly informative. Ladies and gentlemen, Bank of Uganda, alongside other stakeholders present here today, has been implementing the National Financial Inclusion Strategy over the last 5 years. Allow me to thank especially the Honorable Minister of Finance, Planning and Economic Development, who also chairs the National Steering Committee for the Financial Inclusion Strategy. Under his stewardship, several achievements have been registered, as alluded to during this forum, despite the challenges faced in the sector because of the COVID-19 pandemic and the other shocks that came after that in February this year. Just allow me mention some of the key achievements, Mr. Minister. One is the operationalization of the agent banking regulations to allow some categories of financial institutions to extend their footprint beyond the traditional brick and mortar branches across the country. To further enhance expansion in agent banking services, Bank of Uganda is amending the agent banking regulation to remove some of the impediments that have been identified. The second one is the commencement of the work on Islamic banking. Following the gazetting of the regulations in 2018, there are still some issues here, but all is in place. And also the implementation of the bank assurance to extend insurance services to a wider segment of the population by leveraging on the bank networks across the countries. Thirdly, the passing and implementation of the National Payment Systems Act 2020 and its regulation. The Bank of Uganda has so far licensed 17 institutions as payment systems providers and payment systems operators. Fourthly, the establishment of the regulatory sandboxes to promote innovations in the payment system. I'm happy to report that we have already registered one successful test under the sandbox, with the participant graduating to a full e-money issuance license. Recently, we announced the approval of two other entities, Kulipa Limited and APSA Uganda Limited, to test their innovation under this sandbox framework. Fifthly, the improvement of Know Your Customer (KYC) procedures for financial institutions by enabling e-verification of national IDs through access to the National Identity Database. Many thanks to financial sector Deepening Uganda for their collaboration to this effect. Sixthly, the finalization of the Financial Capability Survey for Uganda, whose findings are being used to improve financial literacy and consumer protection initiatives, and will also inform the next financial inclusion strategy. I wish to express our sincere appreciation to the Alliance for Financial Inclusion for the support provided towards these achievements. Lastly but not least, implementation of the framework for interoperability between the payment systems providers, which is expected to reduce the costs related to e-money payments, transfers, and thus increase participation and inclusion across the national payments ecosystem. Mr. Minister, you are aware that we are working towards the establishment of the national payment switch to further make this dream come true of the interoperability between the various e-payments. Honorable Minister, the World Bank, in their recently released Global Findex findings, noted that, quote, mobile money has become an important enabler of financial inclusion in sub-Saharan Africa, especially for women, as a driver of account ownership and of account usage through mobile payments, savings, and borrowings, unquote. Today's theme, enhancing financial inclusion through digital financial literacy, reflects this growing importance of digital financial services and financial literacy in improving access to financial services. Allow me just reiterate the objectives of the forum today. These were: one, to discuss the developments in financial inclusion and financial literacy in light of the changing environment and identify approaches to scale up access and usage of quality and affordable products. Secondly, to discuss measures aimed at ensuring that Ugandans have the knowledge, the skills, and confidence to manage their money well. It is therefore my hope that we have collectively achieved the objectives of this forum. As I alluded to in my opening remarks this morning, the policy measures discussed in the forum today shall inform the next financial inclusion strategy, whose development is already underway. I have therefore no doubt that the implementation of these and other initiatives will scale up financial inclusion and directly support the implementation of government programs such as the Parish Development Model and other socioeconomic empowerment intervention. Let me conclude by thanking the team that organized this forum. They have already been mentioned, our eminent panelists, and all the participants. Your active engagement this morning through the afternoon has allowed us to delve into the various aspects of financial inclusion and literacy. In the words of Sun Tzu, a Chinese philosopher and a military strategist, quote, victorious warriors win first and then go to war, while the defeated warriors go to war first and then seek to win, unquote. With these few remarks, it is my sincere most honor to invite the Honorable Minister of Finance, Planning and Economic Development to deliver his remarks. Honorable Matia Kasaija, you are very most welcome. Thank you very much.
I'll host the Deputy Governor, Bank of Uganda, the keynote speaker, the Executive Director, Alliance for Financial Inclusion, permanent secretaries. Are they around here? I don't even see mine. He was saying he was coming. There are no permanent secretaries. They were here. Oh, okay. In absentia. Heads of government departments and agencies, heads of private sector institutions, our development partners, distinguished invited guests, members of the press, ladies and gentlemen. First of all, let me begin by thanking the Bank of Uganda for bringing us together at this inaugural annual Financial Inclusion and Financial Literacy Forum. Money. An economy where people don't understand money, they are living in the history. So we must understand what money is and what it's supposed to do. It's almost 5 years ago when we launched our first national financial inclusion strategy, 2017-2022, jointly developed by the Bank of Uganda, my ministry, and I joined the Deputy Governor in appreciating the financial support provided by the Alliance for Financial Inclusion to develop the strategy. Thank you very much. I also thank other partners such as Financial Sector Deepening Uganda. Are they here? Oh, very good. CARE International, World Bank, IFAD, and the various private sector organizations that support the implementation of the strategy. I understand this forum is part of the implementation activities under the strategy, correct? Very good. Let me also thank the Deputy Governor for the well-chosen theme, enhancing financial inclusion through digital financial literacy. This theme is well aligned to Uganda's national development priorities. Allow me to remind you that the vision of the government of Uganda, as enshrined in the Vision 2040, is a transforming Uganda society from a peasant to a modern and a prosperous country within the 30 years. We are moving there, but we are not yet there. You heard when the last speaker was talking about PDM. We still have some people to bring into the fold. This vision is being implemented through the 5-year national development plans, for which we are currently implementing plan number 3, covering the period 2020, 21, 24, 25. I'm happy to hear that the Bank of Uganda has aligned its vision to add the aspect of seeking socio-economic transformation in line with the national planning frameworks. The issues discussed today on financial inclusion and financial literacy are indeed key to achieving such a transformation, as I have said before. In the same spirit, let me add that the NRM Manifesto 21-26, as was laid out by His Excellency the President, also aims to secure our future through creating wealth and jobs, delivering education and health, ensuring justice and equity, protecting life and property, and achieving economic and political integration. Having a strong and resilient financial sector is key to achieving these development goals. And we know that the health of the nation's financial system depends upon the ability of its people to effectively manage their own finances, what we call financial literacy. I have referred it before. Therefore, I salute the Bank of Uganda and all the stakeholders for your efforts to promote financial inclusion and financial literacy. Events such as this forum create avenues for stakeholders collectively identifying approaches to transform Uganda for the better. My request is that we shouldn't stop in Kampala. These are kind of seminars upcountry where the majority of our people live. So next time, Mr. Governor, we should either go to Gulu, or Mbale, or Mbarara, or Kasese, or Kisoro, whichever one we would prefer to go to. Now that we have become digital, we are now digital. People are watching us from all over the world. Am I right? Yeah, so we don't need to stick to Kampala. Let's go down where the people who are in need of our services most are. For the financial sector, which is the engine of growth, the challenge for all of us is how to collectively create an inclusive environment. An environment which empowers the citizens, especially those from the low-income households, to have access to affordable and appropriate financial services and products. And in having such access, being able to make informed financial decisions and choices. What can be done to encourage all individuals to prepare a budget and support them to save and invest wisely? Let me repeat that one. What can be done to encourage all individuals to prepare a budget and support them to save and invest wisely? You know, I learned how to save when I was still a young boy. My father was a very disciplined man. You know what he did? He made a little box made of wood. And on Saturdays, we'd go to work in the coffee shamba. And he would give us 1 shilling. And 1 shilling was a lot of money at that time. It would buy a basket of kabaragara. So he would give us the smoonie. You know the smoonie, the half of a shilling. And every time we finish our work on Saturday, he would say, drop that smoonie. The other smoonie, you can go with it to school to buy what? Kabaragara. Have you understood? And he would save for a whole year. Now comes Christmas. Because the tradition at that time, I don't know whether it is today, you have to buy a new dress for a wife. I normally buy one for my wife also, but not only on Christmas Day. Then he would open that box. You get the man out, you go to the Indian shop and buy a shirt and buy a trouser. No shoes. There were no shoes. Do you know when I first put on a pair of shoes? When I was going to St. Mary's College, Kisubi in 1960. That's when I bought a pair of shoes at Bata on Kampala Road. For us who were working with Rugabire. You know Rugabire? You know Rugabire? Ah, these people, you don't know. Shoes made, sandals made out of tire. Shoes made out, no, sandals, no shoes. Sandals made out of a tire. That was our life. For every household that does this, there is an opportunity for them to improve their living standards and bring about a more prosperous community and nation. This is what will transform the lives of our people from subsistence to the monetary economy. The COVID pandemic was an eye-opener. Therefore, as leaders, we cannot sit back. We must proactively reach out to our people to empower them with the knowledge and the tools to make better financial decisions. On the side of government, we have continued to implement and introduce new programs aimed at economic transformation for the Wananchi through affordable access to financial services. Some of the key interventions include: 1. Full implementation of the parish development model starting this financial year. As you know, government has allocated 1 trillion .059 for the 10,594 parishes in this country. My ministry will champion the implementation of the financial inclusion pillar under the parish development model, where it is envisaged that each parish will open a circle. I found that subject being talked about. Every parish must form and open a circle. The way I'm looking at it, 2 years down the road, we should be having a small bank at every parish. And you will see how life is going to be transformed. I urge you to come forward and partner with the government on the PDM implementation, especially with regard to financial education, as I found our presenter saying. 2, the project for financial inclusion in rural areas, Profila. 3, a Myoga program has been under implemented for a few years with commendable outcomes. I've just been with the minister in charge of microfinance, Honorable Kasoro. He's telling me now we have already saved more than 300 million. No, billion? No, billion in that system. That's what he was telling me this morning before I came here. We appreciate the role played by different financial institutions that came forward to support government on the Myoga implementation. 4, the Microfinance Support Center credit to SACCOs and the village savings groups. And finally, 5, the Small Business Recovery Fund and the agricultural credit facilities, which are implemented by Bank of Uganda, plus other wealth creation initiatives. Ladies and gentlemen, government is committed to continue providing an enabling environment for the private sector to innovate and responsibly serve our people. Over the last 5 years, government has put in place several legal instruments which have supported the finance sector and, more critically, the development of digital financial services. Allow me to mention just a few. 1, enhancement of the National Payment System Act 2020. This law clearly laid out the regulatory requirements for mobile money and other digital payment systems. 2, gazetting the National Payment System regulations in March 2021. These regulations operationalized the National Payment System. These regulations operationalized the National Payment System Act 2020. 3, tabling of the Microfinance Deposit-Taking Institutions Amendment Bill in Parliament to, among other things, allow microfinance deposit-taking institutions to conduct agent banking. 4, we also commenced the process of amending the Foreign Exchange Act 2004, which governs money remittances for business. Friends, digitization cannot succeed without adequate and secure ICT infrastructure. Accordingly, government is also committed to expansion of the broadband coverage. The current geographical coverage of broadband stands at 66%. Next financial year, government will extend broadband ICT infrastructure to enable connectivity to facilitate public service delivery. As I conclude, I want to say something here. Deputy Governor, Islamic banking. I hope we are now progressing well. I heard you talk about it. But we'd like that to conclude this, because in some circles, people are thinking there is a religious. There is no religion. Money has no religion. Does money have a religion? Hey, we all need money. We need a system that can help you, can help us to get that money. As I conclude, I am informed that this strategy comes to an end in September 2022, just around the corner, and the financial sector underpinning Uganda has offered to support the government in the development of the second strategy. I thank the FCDU for the gesture, and I invite other partners to join in this effort as well to transform the lives of our people. Lastly, I want again to thank the governor, the deputy governor, and his team who has put up this forum. And I want also to thank the discussants, the speakers, the points you have given out. And my job now is one. First of all, I want a synopsis. I was telling the governor, I want a synopsis of what you have been discussing today, and see if some of those things you have talked about, we can put them in implementation. Again, just to make sure that we help our people who are disadvantaged to get into the money economy. When all of us are in the money economy, you watch this PDM. If we handle this issue seriously, and I can tell you, government, we are serious about it, you will see how your economy is going to transform. If I'm still the Minister for Finance, I will be one of the happiest man or minister in this government. Why? When the people have money, you know what happens. There will be demand for things. That means the industries now will expand. Either they will be more, or they will expand and produce more. When the population consumes, you know, there is my tax body. It will collect taxes. When taxes come in big quantity, then now we can plan big plans for making sure that people's lives become comfortable. And you will be saving me from borrowing. I don't like borrowing, I can tell you that. But now I'm teasing somewhere that I'm a chief borrower. I'm a chief borrower. I have to do that because the needs of the country cannot be financed with the resources that we have. So I will be the happiest. I hope I will be still living to see such a situation so that we do not need to go to borrow. We can borrow. Borrowing is because even in those developed countries, they borrow. But borrow minimally. They borrow minimally for things that maybe we cannot afford. With these words, I don't know, do I close the session? Do I what now, Governor? How do I conclude?
I'd like you to officially launch the financial capability survey. So
Give it to me. What is the survey? Okay. I'm told there is something that I'm supposed to launch. Okay. Okay, so we are launching the report now. Governor, come. And who else? The commissioners. The EDF, Executive Director. You come and mention them. Come and mention them. Who are supposed to come?
Would like to call upon the Executive Director of Finance, the Head of Africa AFI Office, and the Deputy Governor.
Okay, thank you very much, all of you, and congratulations for having gone through this session. So I can go back and sit down?
Maybe a picture?
Now, Deputy Governor, who has invited me here, you would have to allow me, and I leave you to conclude, if there is anything to conclude, because I'm required somewhere at 1 o'clock. It's already my watch. No. I have required there at 2:30, and it's a mission that I can hardly afford to run from. So thank you very much. Oh, take a photograph. Okay.
So to the rest of us participants, the financial capability survey will be available on the QR codes that you have on the Bank of Uganda website, and since we are going digital, we are minimizing the number of copies we are printing. Thank you.
Ladies and gentlemen, we've come to the end of this annual conference on financial inclusion and financial literacy, and I want us to give ourselves a big round of applause for staying this long. Once again, let's give a big round of applause to the Bank of Uganda team that has put this together. Ministry of Finance, let's also give them a big round of applause. And all stakeholders that are involved in this process. Ladies and gentlemen, thank you very much. We would like to presume that everyone has received a coupon. If you have not received a coupon, here at the front table is where we'll be. Secretariat is over there, and we'll be able to manage that so that you'll be able to take on your lunch. Our expectation that this is going to be an annual forum, and so the expectation is that till next year we'll be able to meet still and discuss the directions that you have shared with us in terms of financial inclusion and financial literacy to continue this discussion. Let's not forget the financial capability survey, that the report, that has been just launched. It's important to access it through the same code. You'll be able to access it and utilize it and get that information so that we extend the discussion. Right now, ladies and gentlemen, we don't want to hold you any further. Allow me also request you to give Rita here a big round of applause for steering this discussion. And I'm not going to say that you need to clap for me. Through Rita, you have appreciated me. I am now going to request the legacy team to play for us the national anthem as we rise, and then we'll depart at leisure. Thank you very much, ladies and gentlemen.
Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Ladies and gentlemen, we don't want you to feel left out. Let everyone exchange a right hand of friendship to their neighbor and thank them for attending this conference. Exchange a right hand of friendship to your neighbor and wish them also a happy lunch. May we enjoy our lunch. Bon appetit. Let's all meet in Katonga as folks speak to spoons. God bless you. Katonga. Our lunch is going to be upstairs, so the moment you get out, please find the stairs and find your way. All right.